This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Happy Thursday. Welcome back to another episode of Benzinga Live. Today, kind of I would consider a slower news day, but we'll go through the top headlines of the day, as well as checking out what's going on in the overall markets, and of course, what's going on with cryptocurrency overnight. Bitcoin testing again that $30,000 level, hanging out precariously close to that level now at 30,106 is the number I'm looking at right now. So if you're watching Bitcoin, if you're holding it, then I'd be hoping for it to not fall below that $30,000 level. But we'll see what happens today. I will say, I was worried the first time it passed through that a couple weeks ago, and it recovered pretty nicely. So I was wrong there, thinking that, oh my God, if it drops below 30, it's going to continue to drop. We had some Tesla news. We had some BABA news. China stocks are moving, so we will talk about that. Here in about 10 minutes, actually, Vivi, the biotech queen, is set to join us. We'll be talking some biotech stocks and updates on her favorite picks like BCRX. And then after that, I might get a surprise appearance from Money Mitch. And then after that, we've got Jesse Kaylor, Elite Trading. So let me know in the chat what stocks you guys are watching. If you guys have any stocks or any trades that you're watching. Kevin's saying when Bitcoin breaks, it's going much lower. 200-week moving average is 22K. It broke out at 12K. My strap matches my shirt. I don't know what strap I'm talking about. Oh, the watch strap? I don't know. Anyway, I'll talk about some trades I had open today. So let's start with just taking a look at the overall market. Let me get my Benzinga Pro pulled up. And again, please let me know what stocks you guys are watching, if you guys are in any trades or looking at any trades, because I have been looking for some new ideas this week as well. Yeah, Mo Herbert, we have a new we do have a new intro in the making. And yes, Spencer is on some super yacht down in France. I don't know if it was a scratch off or what, but he's been living well. We'll just say that. Where is my Benzinga Pro? AB pop? Easy, Mike? You mean we're getting a pop, or you're looking at pop? I say soda, not pop, but depending on where you are in the country, some people say pop. All right, guys, let's check out the S&P 500. We are currently down a little bit more than a full percent, 1.1% right now. You can see we're coming down below this 410 level right here. This is a 2-minute chart. Let's go out to the daily and see where we stand, because we were so bearish for a while, and everyone out there was like as bearish as you can be. People were whether we were talking about the war in Russia and Ukraine, whether we were talking about inflation, whether we were talking about companies laying people off or bad earnings, just everything was about as bearish as you can get. And then right when that was kind of happening for a couple weeks here in late May, up until the holiday weekend, we were not trading well at all. Then we got 3-4 basically huge days in the S&P 500, kind of one of these relief rallies, bear market rallies. And since then, we've just been barcoding. And it looks like the market, unless we turn around here today or tomorrow, that the S&P could easily continue falling and giving up these gains that we've gotten in the last 2 weeks. And in the last 2 weeks, we've gotten some kind of warnings from some of the biggest companies out there, whether you're talking Target, Microsoft. Target said that its margins and profits will not be as good because they were oversupplied in inventory and the consumption mix has changed. So Target is going to be forced to just basically give aggressive Sales, I've heard numbers basically that there will be things at Target that are off as much, that are priced down as much as 90%. So Target was basically just getting out ahead of that, and we can take a look at Target stock and seeing the impact on, making that announcement. This big move here, again, we're looking at the daily candles. This big move was after the company reported earnings back in May, but then here is kind of where, the stock continued to move lower after, all the way down to, let's see. Looks like we got to, that was a couple weeks ago. Looks like we got to recent lows of 147. And keep in mind, this was a stock that was trading at 250 less than 3 months ago. April 21st, 2022, the stock was trading at 250, and now we're all the way down here at like 156. And this is all because Target basically, the CEO even said in that earnings report that we're still seeing a resilient customer. The consumption mix is just changing. So I don't think this is like a big deal for Target long term at all. I mean, Target is a huge company, a very strong brand. Target will be around. There's just a cyclical nature of the economy, of the financial markets. So when you think, like, you just cannot be in a straight line. I mean, economists in an ideal world want 2% inflation, low unemployment, and growth, and it's great, but you just cannot, or at least historically, we have not just had that sustained for years on years on years. There are always cyclical downturns. So long term, in 10 years, is it going to matter that in 2023, spending was down for Target? No, I don't think so. But am I buying Target out here for like a swing trade or to hold for the next 3 months? No, because I am getting more worried as you see more companies coming out and giving these warnings, because they're the biggest companies. If Microsoft is saying they're going to get hit, and Microsoft gave kind of, in my opinion, this kind of BS Forex reason for why their margins aren't going to be as good, that the Forex exchange rate isn't as favorable for the company right now. But there are a lot of companies, basically all of the biggest companies do business internationally. So if it's the case for Microsoft, then you'd have to assume it's the case for other companies as well. I think it's more just, maybe they don't want to say the demand is lower for its services or products. But either way, they're getting out ahead again, like Target did, and just saying this quarter isn't going to be as good. Our margins aren't going to be as good. Our profits aren't going to be as good. And for that reason, I'm listening to what the actual companies are saying and what they're willing to tell us as investors, more so than I'm listening to some guy on Twitter saying, the market's going to crash 30% or we're going to rally X amount. Because no one knows. If someone knew the market was going to crash another 30% from here, well, you could make a lot of money. But we could rally just as likely. I've just been more concerned with some of those big companies' earnings. I personally think, if I had to give a prediction, and this is obviously completely not, what is going to happen. This is just if I had to guess, and not financial advice, I would think that we have a little bit more to fall on some of the biggest names, Microsoft, Apple, somewhere in like the 10% range. So if say Amazon goes from 120 to drops $12, 10% goes down to 108, I'll buy it down there. And then if it goes down another 5%, oh well, I'm going to be holding it long term. And I know like Amazon, I know Apple, I know Microsoft. Google, I actually think is one of the more interesting opportunities in terms of the bigger names right now. We can go to the over here in Benzinga Pro and check out some of the metrics. I mean, 5.8 price to sales. That's like historically low for Google. It's not historically low looking at across the board if you're looking at some mining company or something like that. But for Google to be able to get it at a forward PE of 20 at an under 6 price to sales, to me is pretty attractive. We can look at, look, they have like no debt, 12 billion. They have more cash on hand than their debt. I think Google, it's to me, it has one of the strongest moats out of any of the biggest companies. And when I say that, I just mean it has no one, it doesn't have a direct competitor. Who is competing directly with Google? There are certain parts of its business that is a direct competitor, and then on top of that, you have YouTube, which is just like a monster. The YouTube I forget, Rohan, what they're called. YouTube Shorts, I think, have been doing really well. All right, I see some tickers flying in the chat, so let's check out some of those before we get Vivi on. Tesla is the ultimate. This is like the favorite stock always to check out. We go to a 2-minute chart just to watch some of this intraday action. So yeah, I mean, it looks like we came off at the open, ripped through that pre-market open, broke out to about 765, we'll call it. Let's see. Yeah, 766 was the high. And now we've come back down here. Let's go. So Tesla shares are trading high after UBS upgraded the stock from neutral to buy and announced an $1,100 price target. The China Passenger Car Association also reported the company's Shanghai factory produced 33,000 vehicles in May, up 21% from April. That's some good news for Tesla. And it's only up 1.25%. You would think you would think that it'd be moving higher off that good news, it sounds like. But I'm still worried about Tesla. I was mentioning on the show, I plan on buying a couple puts before the company reports earnings in July. Just because from what I've seen, it doesn't look like a lot of people were buying cars in China or even here in the US in general. And still a lot of cars purchased here, but just not as much as like the previous quarters. So it would just be hard for me to imagine Tesla reporting as good of a quarter as it did last quarter. So I don't know. I mean, again, that's like a speculative bet I'm making, that I'm basically just gonna buy some puts, and if I'm wrong and Tesla goes up and the puts expire worthless, oh well, that was a risk I was willing to take. And I also am long Tesla via ETFs, because it's one of the bigger holdings in like the Qs, I believe, in VOOG, VOOG, which is the Vanguard S&P 500 Growth ETF, which makes up in VOOG, it's the fourth biggest holding, 4.29%. So if it goes up a lot, if Tesla goes up a lot on a great earnings report, or if UBS is right about its 1,100 price target, I'm not upset at all. I'm not some like huge Tesla bull, or I mean, sorry. Well, I'm not, but I'm also not a huge Tesla bear. Like, I'm not one of these people that's dumb enough essentially to continuously lose money trying to short Tesla, but I also don't want to buy it. Like, it's just not attractive to me at these valuations, at these numbers. It's still trading at a 60 forward PE, over a 13 price to sales, and there's this kind of implication that if you're buying Tesla here, you believe it is going to essentially like overtake the world car market and become the most selling car. And I'm just not convinced that's the case with all the competitors coming out with like other cool electric vehicles right now. And I've seen some of the analyst numbers, predictions of like what type of market share Tesla will have by year 2030 and all this stuff. And they're all pretty much ridiculous projections, in my opinion. You know, saying it'll make up like 50% of the total car market. It's like, on what basis? It's going to have to compete with Mercedes, with Audi, with all these other higher end kind of luxury cars. And if time will tell, though. Volkswagen, again, too, is interesting to me. VLKAF. Is this the right one? VLK. There's this one in VWAGI. Volkswagen is very cheap compared to Tesla. No, wait, I think we got to go to the other one. BKLAF. 0.4 price to sales, 5 PE, 6 forward PE. And Volkswagen has essentially been investing more than anyone outside of Tesla, like into the EV space. Like Volkswagen, which owns and operates Audi, is going to be producing a lot of electric vehicles going forward, and Audis are pretty nice cars. All right, I do see Vivi, the biotech queen, hanging out, so I am going to go ahead and play our special intro, bring Vivi on, and we will talk some biotech. Vivi, how's it going?
Good. How are you?
I am good.
What
Do you
a
want to go
top,
through
huh?
some of the stocks you've been watching the last week or so?
This market's been so choppy. Oh my God. Like, come on, SPY, make it like a clear, make up your mind, right? Just go up or just go totally down. Like it's been like it's so choppy right now. But I wanted to tell you guys a couple things, an update on BCRX. BCRX, remember how I told you guys that the study is still the enrollment is still being halted. That's why we took that huge dive on BCRX. If you can just pull the chart up.
Yes, ma'am. I'm pulling the
Yes.
chart up right now. Sorry, I'm just trying to get some audio
Yeah.
things figured out. So if there's a slight echo, I apologize. We're getting it fixed right now.
And I'm sorry, guys. I am like on the middle of a home study for my new job. My bed is a mess. I had a teenager sleeping here. One of my kids' friends last night. I'm like, it's a mess, but I'm here.
On a school night? Oh no, they're on
Yeah,
summer
on a
vacation.
school night.
They're on summer
It's always on
vacation.
a school night. But focus this just on my face. Don't look at my
Okay. Well, you look great.
So BCRX, we're still waiting. There is a huge there's a huge theory that they're going to be able by lowering the dose still have a benefit versus risk in terms of efficacy, and you're still going to be able to to be able to go on with that factor D. But everyone is kind of awaiting. I think that's why the stock hasn't taken off, but they got last week. Now they got yesterday, an FDA got a granted fast track designation for one of their lead candidates for prevention of a heterotopic ossification (AO) in patients with the fibrodysplasia ossificans progressiva. So again, another rare disease. And what I like, I mean, let me give you guys a little example of what to look for. For example, can you pull up, and I'll go back to BCRX, but can you put up INSM, INSMAT?
INS what?
INSM.
M. Yeah. I also just want to.
INSM.
Yep, I got it. I just wanted to say real quick about BCRX. You say it hasn't taken off, but it's still a stock that went from what, $3 to 20 in like a year.
Yes,
that's
but what
not
I'm
bad.
saying is, no, not bad. But what I'm saying is, I still, just with that rare disease drug Orladeyo by itself, they're still doing really well. There still be a $15-17 a share. So look at the upside potential we have from here. So let me give you a perfect example. So INSMAD, the high was $34.50, right? And today they are at a $19.20. The reason is I like this company as well. It's rare disease. So they have a drug for non-tuberculosis, lung infection that costs $10,000 a month, right? So then you have Orladeyo with BCRX that costs another $15,000 a month. So these companies with the rare disease drugs that you don't need a lot of volume to make money and they can stay afloat, and they all have a really good pipeline, like BCRX, again, this FDA track designation, has an orphan drug. INSMAD has all these rare diseases in the pipeline as well. So that's what you guys want to look for, because I mean, look at PHAT, fat. I'll give you a perfect example. Just got a FDA approval.
And what is that ticker again?
PHAT.
PHAT. I like that ticker.
Yeah, fat. So think about it. I mean, I hate to say it because I have friends that work there, but that's going to be a really, really hard company to take off. Why? Because, I mean, there's 65 million patients that suffer from GERD, but they're competing with an Nexium that you can buy it on Amazon over the counter. So they're going to have to work really hard. And imagine Nexium is like $30 a month. How much this prescription the insurance is going to pay for? Maybe $200-300 because it's going to be a prescription. So think about it. You have a rare disease like BCRX and INSMD, and then you have this competing with the over-the-counter. I mean, another one, EVFM. Look at EVFM. Like they spent a lot more in marketing than they did with the drug, and the drug wasn't, the insurances were not reimbursing. It wasn't a rare disease. So I'm staying away from any company that does not have a rare disease in their pipeline.
Oh my God. Yeah, this chart is ugly on EVFM.
Oh my God. So, and then you have ALNY. ALNY is an amazing drug, amazing company, all rare disease. You put a patient on is $100,000 a year. for these companies. So did you put it? Yeah, Alnylam Pharma. It's another potential. What is the high on Alnylam Pharma?
Let's see. Going back to whoa, I accidentally went back. 1 second.
Look at you. Next thing you know, you had a Yahoo pull up or a Google.
I know I accidentally went. I hate when my computer does that sometimes. It'll like go back to the previous page I was on. Recent highs in October 2021, $211. We're at 135 right now.
So look at, guys, accumulate these rare disease companies. There's no reason why they should be low here. Obviously, everything is down. Everything is a discount right now. So the tech, the biotech, but you want to look for companies that have, a healthy spreadsheet because of the interest rates, so you want to look at companies that are trading very close to cash. So that's what I've been putting my money into, just looking at companies that I know that will eventually pay out, so the small biotechs with no product approved, not a rare disease that's going to be approved in 6 months, I'm staying away until things get better, because the interest rates are going to kill these little companies, unfortunately.
Yeah,
So
and I'm reading.
we didn't have any tickers last week. Do we have anything? I mean, I think everyone is just so bummed out about biotech overall. I think that's now the opportunity, right? XBI is still at $70. So if people
someone in the chat's asking about Viracta Therapeutics, ticker VIRX.
VIRX. I never heard of it, but I'll bring it up for next week. VRX. But what's the price at?
It's $3.40 right now. It looks like we've had 3 really good days in a row. So I'm gonna go into our news tab and see if we have any news on here. Yep. Looks like they put out a Form 8 provides an update on the phase 1b/2 trial of Nanaval in patients with advanced Epstein-Barr virus.
EBV. But look at the phase, you guys. Phase 1. I mean, yeah, you want to swing if the chart looks healthy and there's catalyst coming up. Yeah, let's swing it. But these companies are in phase 1. How are they gonna continue to increase the capital for their R&D? These companies are gonna be diluting, and they're not going to be able to get private finance because it's so expensive. So that's the problem. I mean, I'm not holding long-term any companies. Like I told you, I have ADAP because Genentech is funding them until next year. So until the end of next year, and they have an amazing pipeline. But I bought it at $4. It's $1 something,
Yeah, it's $1.68 right now. Yeah, it's tough, like you said. It's tough, like you said, Vivi, with these companies if they're just in the phase 1 trial. There's really a lot of things, and even if things are going well, it's going to take a lot of time. And like you're saying, it's not going to have a lot of capital flowing in potentially. But
no.
Yeah, we'll definitely look at. I mean, the chart looks interesting to me. You have this kind of rounding bottom. We have 2 really good days in a row, so I wouldn't be surprised to see this continue to move higher, at least in the short term.
Oh no, I think right now the biotechs are coming back in terms of swinging. There's great opportunities to make money, but do you want to buy and set and forget it? Probably not. You know what I mean?
Right.
Not with these companies. Next, I told you, I mean, a lot of people haven't seen me in a show, but I told you my first biotech company I ever bought was IDRA. And I just bought 10,000 shares and I let it forget there, thinking, oh my God, this company is so promising. And they went through so many reverse splits, so many dilution, that I would need $40 a share to break even today.
Holy cow. And
just to have you guys have an idea.
Oh my Lanta, that's incredible.
I know, it's crazy. So you
would need it to go from 65 cents to $40 to break even.
Yes, obviously I took my loss and I moved on, but it's just to give you guys an example, like you cannot just buy these little companies and just set and forget it, because if they're like 5 years out, they're going to continue to dilute or reverse splits to be able to be in compliance with, with NASDAQ. Is a nightmare. So, but I mean, I'll check VIRX. But again, you guys are completely talking about phase one, phase two. Long term, it's not a good idea on the way the market is and the interest rates for us to be holding any companies that don't produce any revenue. So, don't you agree, Aaron?
I agree. I mean, I think just this environment right now is very it's just very touchy, so you got to be careful. Um, but I'm hoping that, like you said, that biotech can start swinging back. I'm hoping the overall market, SPY, Qs can eventually start swinging back because basically just because like we have kind of these bearish warnings, there's still money out there. People are still buying. We saw even while the markets were coming down, retail was still out there buying these stocks and stuff. So I'm hopeful, but right now I think it's tough to really like be convicted buying anything.
No, and I think, I mean, a good idea is, okay, you see Amazon at a 120, like if you want to spend 120 grand on Amazon, maybe you buy 300 shares now, and if goes down, you accumulate, you do your cost average. There's ways to make money in this market. Sell puts if you really want to own the stock, and if it goes down, you get it for that price, and if it doesn't go as much down and you hope, you collect the premium. There's ways to like have the income coming in. So I'm trying to sell puts. I'm trying to sell some of my calls, and if it gets taken, it gets taken, because there's any kind of healthy movement on SPY, all of a sudden people start buying calls thinking that we are in a reversal. So there's ways for us to kind of a leverage, and kind of do a cost down average for our stocks to be able to, to just stay afloat, and accumulate.
Definitely. So have you been buying anything recently, or have you just been kind of sitting cash on the sideline?
I've been day trading, to be honest. I mean, on my long account, yes, I've been selling some calls, but on my short term, I just been trading SPY, Apple, QQQ, just just small little gains.
Those aren't biotechs.
No, they're not. I'm definitely a options trader in terms of like daily.
Nice.
I'm an options trader. Yeah.
Nice. So, I've been trading some options too recently.
Yeah. So I've been doing options, and if my goal is like a green day. Today I'm I'm up $140.
There you go.
Right. I'm like, small little gains. My goal is not to go red. So
there you go. There you go. Yeah. My play for today, I'm going to buy some Lotto QQQ calls that expire tomorrow, for in case we get for somehow a low CPI and maybe the market rallies tomorrow off that.
Oh yeah, the low CPI. Yeah, that's true. I don't think the market is gonna take a direction until tomorrow. I bought, and I had a Netflix puts. I made $25 today, but I'm just so cautious now. Like I get a little nervous. I'm like, I'd rather not take any losses and have a small gains than, like wait for that bounce to happen and never happen. So that's what I've been doing. It's fun to trade options because your account gets clear every single day,
Yeah, exactly. I'm not really holding any positions. Actually, I did buy some of the stock of this mining company that I liked.
So
and then
CPI, what did you get, to tell the listeners what QQQ did you get for tomorrow?
I bought $314. Here, I can share my screen.
Yeah, 314 for tomorrow.
Yeah, so it's like if the markets like really really rally off a low CPI, then I'll be good. But I bought them.
A lot of people get super successful doing straddle,
Yeah, definitely.
Buying a put really, really down and buying a call up, and you kind of like, when you cost average, you like break even, and then if people will buy like 2 calls and 1 put, but the put really, really low. I haven't straddles, but a lot of people do that.
No, definitely, and that's a very smart way to do it. The whole reason I bought these is to play the CPI tomorrow. Well, just a minute ago, it said it was up like 10%, but I was like I almost just want to take the 10% gain and call it, because in this market, like if I do that consistently, I'll be good. But it's hard. I'm gonna keep them overnight just in case. Like I said, I'm rooting for a low CPI and I'm rooting for a rally. So that's what I'm going for.
People don't understand, like, if you make it $100 a day on the stock market, you can accumulate to, I was looking at, it's like 25 grand, 30 grand, adds up. It really adds up.
Someone's asking about CALA. Calathera Biosciences is a clinical stage farm company which focuses on discovering and developing small molecule drugs and target novel and critical metabolic pathways in tumor and cancer fighting immune cells.
Okay, I'll take a look. How about we we got a ticker for next week.
Yeah, we have Kala and then VIRX.
Just message me on Twitter too, and then I'll take a look for you guys. But
Right.
Bioscience is at 22 cents. Come on, you guys.
Yeah, give us some non-penny stocks.
22 cents? It's junk. Anything, it's junk.
Give me something past phase one.
I'm trading the chart, I'm trading SIOX. I don't even like to announce, I bought at 37 cents, but I'm just trading the chart, the volume, it's trading on the cash. So cash value would be at 60 cents. So, but you just swing. I'm doing short swings. You don't want to hold these companies forever, because especially if they're under compliance, they're going to do a reverse split to get under, to get up to that dollar compliance. So
I see Kadir in the chat asking about BCRX. We did touch on BCRX right at the beginning. So if you just want to rewind a few minutes.
Yeah, we did. Like I told you guys, fair value based on Oladeo, $17 a share is a fair value for that company. They just had an FDA designation for another rare disease. And now we're waiting. I mean, this can go from $17 a share to back to 22 in a day if we get that study figured out. The Factor D pipeline, they halted enrollments. They haven't stopped the study, but they stopped any further enrollment. So it's just a waiting game right now. But you still have a 50% upside potential just based on Oladeo by itself. So I still recommend that's a good buy right now.
Yeah, and sorry, we're talking about BCRX right now. I was looking at the numbers on Biogen, so let me just go over back to BCRX. And then
Biogen, when those wraps for that awful schizophrenia drug that didn't work, there was a huge controversy why the FDA approved that drug.
Do you know which drug that was?
Do
you know which drug that was?
I don't remember, but it was the biggest controversy because the doctors are saying that the placebo worked as good as the drug, and people were enraged to the point that doctors didn't even want to see the wraps. Like the doctors were enraged, the neurologists, and they just laid off their sales force. So it was a huge controversy. You don't remember that on Biogen? It was huge. If you look at a news of Biogen, I think it was like 7 months back. People were enraged that drug got approved. It's just. And then people start accusing FDA how biased and how bought out they are, So
interesting.
Yeah.
I know Johnson & Johnson has a drug that's supposed to work for
Alzheimer's. Is hard. Alzheimer's is very hard to get a
it was the Alzheimer's one. Yeah, I thought you said schizophrenia. I was confused.
No, it's schizophrenia. There's a lot of good novel therapies for schizophrenia, but Alzheimer's are really nothing good. It's such a progressive disease.
No, yeah, I remember that now.
Remember, it was a scandal. It was a big scandal. It was all over the news. Yes. So I will take, I don't have any tickets for next week because I refuse to look at a Kaylor at 22 cents. I mean, come on.
I know there was another. We already looked at VIRX and they were phase one. So it's phase one, not that interesting. All right. Well, how about this? How about you come next week with a list of like 3 kind of interesting ideas?
Absolutely. Maybe we can look at PDUFA dates and look at the data, the preliminary data, and see if we have good ones. But I feel like there's a little bounce in the small bio tech right now. So good for a couple swings for sure.
Beautiful. All right. Well, Vivi, have a great rest of your day. Thank you for coming on. I just threw your Twitter link in the chat so folks can follow you there. And have a great rest of your day.
You too, guys. Okay, bye-bye.
Bye-bye. All right, guys, that was Vivi Biotech Queen. Go give her a follow on Twitter for more information on different biotech stocks. And like she said, she's trading options and doing SPY and Qs and whatnot. Speaking of Qs, I think we took a ugly. Yeah, my calls. I'm gonna wait and then this afternoon, if we're still trading lower, buy a couple more of the lotto calls to make it a true lotto tomorrow. All right, I got my man Jesse Kaylor from Elite Trading hanging out in the back. I gotta bring him on. I gotta talk to him about something I kind of screwed up, but let's give him our special intro because Jesse's the man and he deserves it. So Jesse, are you you're in Cincinnati area, right?
Yeah.
Is that an Eastern time zone?
Yeah, we're EST.
I had no clue. I screwed up. So you were saying, "Oh, I can come on X your time." I wasn't expecting you for another hour.
Oh no.
No, it's good. I'm glad you're here. I'm glad you're
so
here.
Early.
I just put it.
The early bird gets the
no,
worm.
my trade came back. Are the Qs coming back? What's going on? Nope, they're not coming back. Come on, Qs.
they're hanging out there, man. They're either gonna go down to 302 or they're gonna capture that 310 maybe or.
Dude, you know what's not hanging out are the actually the airlines have come back a little.
I was looking at LUV today. That's so weird.
I've been looking at. I had calls on it and just like kind of lotto calls because it looked a little like oversold and just no bounce whatsoever. Well, now we're finally getting a bounce, but it was. I mean, look at this. It went from like 45 to 42 in 2 days. I mean, it's not that big of a move, but still.
Yeah. I literally was just looking at AAL and looking at LUV, looking at the airlines just because I haven't looked at them in so long. I did the old trick when I get bored and I don't know what I want to look at. And in the mornings, I've been going back and just going to my original accounts, some of my older accounts, and just scrolling all the way through my search bar to the bottom and just looking and seeing what I was looking at. And a lot of it was airlines. One that popped up was NBR. I don't know if you know that one, but they've been down and out.
Yeah.
And
yeah, you can share your screen. Oh, you are. Let me pop that up.
And this is just one that I've been kind of watching for a little bit of time, and I had no idea when I was looking at it before. It was in that 140 range, and I was like, oh man, this might be a good time to buy, and I missed out on that one. But I've been watching this one. No really options plays in there though. Not enough liquidity, not enough open interest on that one. Other ones that I was looking at were like GAN, because I haven't seen them I haven't looked at them in forever, and I couldn't believe how low this is. BYD, BYE, Wood Gaming we talked about last week, still on the radar. And then I did end up taking that trade that I told the chat when I was like, hey, I'm going to look at some beat down penny stocks and get into a couple. One of them was a good one. It was a 21% gainer, still holding up today, is Genus.
Genus, I haven't heard about that one in a while.
Called it at 75 cents on Wednesday last week and said, hey, I'm going to take a stab at this. And now it's at 91. So I set the stop loss, good to close until it hits at 85 cents with my 10-cent profit. Just going to let it run from there. It's now at 91. So probably pull that up a little higher if we get above 90, 93, 94. I'll probably put it right under 90 there and just keep drawing that stop up. So make sure I make sure I lock in that profit on that no matter what, especially on those little penny stocks. If you get a 15-20 cent move, that could be a big move depending on how many shares you got.
Yeah, I mean, like we've been saying, this market is just one of those markets that you want to book any profits you can take. I don't know. Yesterday, I don't know if you were hanging out in the show at all, but I had these puts on Tesla and I was up like 80% on them, and I was like, I kind of want to hold on to these. And Nick Shaheen was on the show and he was like, no, sell them. And I was like, all right, fine.
Nick's a smart man.
I know.
I tell you that all the time. Like, you're like, oh, I'm up this. I'm like, why don't you just sell it? You're like, I don't know, I probably should. And then it's like the next day. But a lot of times you'll wait till the next day and you're like, look, I'm up 100% now. And
I know. Well, that's the funny thing about, for a while, I'm actually out of it now, but I was in like the PDT restrictions where I couldn't if I bought an options contract, I couldn't sell it till the next day. So there were times where I'd be like up 50% if I bought them too early and be like, oh, I wish I could sell them right now, but I can't. And then I would be forced to hold on to them, and it would either like screw me or be like, oh, thank God I couldn't sell it because now I'm up another 100%. So, but now I can sell in the same day, but just I can only do it, 4 times in a week or 3 times in a week.
Yeah, to get that day trading. When I first started, I got caught in a couple Tesla calls. I had like 5 Tesla calls at like $2,000 a pop, and didn't realize that I was on the account. I had set up multiple accounts, and one of the accounts I had it set up. I didn't have it set up the right way, and it was like, yeah, you can't sell this till tomorrow. I was like, that's like 10 grand. I was like, I just want to, and I was up like 20% too, and I had the same thing. But I ended up actually closing them the next day for like a 40% gainer. And I was so happy because it was just like I hadn't traded Tesla options that much back then. And I mean, this is years ago. And I was just sitting there like, how did you do this to yourself, Jesse? Put yourself in a 10 grand situation overnight. Like, oh, I can't get rid of these at all, no matter what. But be careful, new traders. It happens every now and then. 305 break, they said on
on the Qs. So Lord Byron's asking, why do they impose a restriction on day trade? Is it some kind of protectionism? Yeah, I believe a lot of these rules were actually implemented after the 2000 crash, and a lot of retail investors kind of had their savings accounts wiped out, and more people just with the invent of computers and the internet and started day trading, and it's one of those things where it's tricky because like I'm more on the side where it's like, I think more freedom, less regulation here would be better. But the flip side to it is if the SEC or is whatever is getting the stats back and it's 90% of day traders are losing their money and, like all these things, then they probably want to do something to try to protect those people. So I think it's out of good intentions. It just ends up, it's like I get pissed. I'm like, frick, now I can't sell this contract. I'm up 100%. Like, thanks, SEC, So it's, I don't, people look at some of the PDT rules and see like this is how they're trying to hurt the little guy. I don't think that's true. I think it's the exact opposite. I think they're in a lot of ways trying to protect people, but it just ends up not being great in practice.
Yeah, their intent is, it seems like they're trying to protect the retail traders, but to me, restricting you on being able to complete a trade is not a good way to help somebody. But
no, I agree, and I run into that problem.
Like,
but the ghost brings up a good point. If it's a full cash account, you can day trade all you want. There's no PDT restriction. So that's the big thing, is they're protecting people who are taking margin and kind of taking riskier measures than just trading with cash. Because if you're just trading with cash, you can do it all day long. I'm pretty sure Robinhood, you can't just have a straight cash account because they do the way they do like the instant deposit. I'm not quite sure.
They need to, in my opinion, they need to make it to where you have to go through like some type of class before you can use margin, in my opinion, because there's a lot of people that had no idea what they were doing, buying options with margins and trading, just not even understanding what they're doing. I don't think a lot of times when they're using their margin, and then you see what happens in the last couple of months where, people are probably like waking up with some really bad accounts, waking up some bad news. So be careful with that. I have Robinhood cash account.
I don't know. Like I know I at one point tried to go like only cash in Robinhood so I could trade as much as I want. But there was something with like the instant deposit, but maybe it's because I pay for Robinhood Gold. I really don't know. I haven't looked too much into it, to be honest.
Anybody got any tickers in the chat here? What are we looking at here? Yeah, I don't know. Yeah, nothing. Got it. Everyone's talking SEC, trading cash. It's been pretty.
We do have CPI tomorrow. We had some Tesla news. Got an upgrade today. We had China moving. It just seems like one of those days where it's like the market's not really making any huge moves to either side, and we also at the same time don't have any like huge company news. So it's just kind of a quiet day on Wall Street.
Well, it's out of my trading range. I mean, I'd have to reestablish it. It looks like 617 was your low there. I mean, so 691. And then you've got the 729. So I mean,
So these red lines, you would like it to the upside if it gets above those
yeah,
price targets?
I'd rather trade it between this margin here, but that was when it was like this, like when I was probably trading this, because it's been a while since I've actually charted anything to do with Tesla. Once they broke down in this area, it was like we had this one here. We had this big drop off. I was like, yeah, I'm out. I'm not looking at Tesla anymore. when you have stocks that can drop hundreds of dollars and a day, it just wasn't going. It wasn't working with my trading plan. I kept getting stopped out, but it was fun trading them at the time. But I've really gotten a lot more strict on myself with my options trading. I've been selling calls, selling the puts, and trying to make it less interesting, but more secure on the profit. I've been following a guy in my group for a long time, and he's got his own channel in there, and he's all he does is sell debit and call spreads pretty much all day long, and makes good income on it. So I do have my random ones that I'm looking at, like the Genus. I was strictly like, hey, I'm going to throw $500. If I lose it, I lose it. If I don't, I'm going to try to gain a big gainer on it. But other than that, it's been really been boring in our group. I mean, it's been just selling calls and selling puts to try to get through this volatile time, in my opinion, where it's kind of just nobody really knows what's going on for the long term. You've got, like I think you said earlier, you got all this bad news out there, but then you still see retail traders are buying. You still see some institutions coming in and buying on occasion. And I think
I think one of the
nice little move.
Right, and that's why I think one of the good, if you were trying to be an optimist, look at the bright side here, is there is a lot of cash on the sidelines right now, whether you're talking from retail investors or institutional, basically people that sold some of their equities, sold some of their stocks, and have just been kind of sitting on this pile of cash. And people are just waiting for some sort of assurance that, okay, we're not going to see some huge recession and some huge market crash. And I think it'll happen quickly when we start seeing some of these headlines flip from being super bearish to, oh, not so bad, whether it's like, hiring continues to be strong, or we get CPI tomorrow and maybe it comes in lower than expected. And it's like, oh, maybe inflation has topped, because if CPI comes in lower than expected tomorrow, that will be 2 months in a row that it's come in lower than expected, and it would be that could be seen as a top for inflation.
Yeah, I hope so. I mean, for the sake of everybody in the community around me. I mean, personally wise, I told my wife, I said, hey, we're gonna just calm down a little bit over the next couple months. Whether it's going to events, concerts, spending extra money, because things like that, it's just using the pass. We're just using our Kings Island pass. Like, I'm like, let's just use what we've got and not like overdo it right now. And she was like, why, what's going on? And she doesn't follow the financial markets or anything like that much. She just listens to what I got going on. And I was like, it just feels uncomfortable. And I was like, I don't feel that, that it's done yet. I think that we're going to get some breathers here on certain stocks, but I think a lot of these stocks that we were talking about early last year are going to go to zero.
Oh, and yeah, I mean, some of these, like, the Wishes, like some of those companies, they're on their path.
Beyond Meats,
but well, I don't know if Beyond Meat's going to go to zero.
I just like my buddy's probably watching. I know he just laughed because I said it to him yesterday. I said Beyond Meat's going to zero. He's like, it ain't going to zero, and I'm like, no one wants plant food anymore.
It ain't going to zero. But what was I going to say is yeah. So if you just think about it in like a simple equation, essentially, like most Americans have an expendable, they only have a certain amount of expendable income each month. There are some people that, make so much that they could spend they literally like can't spend how much they make, right? If you're making $1 million a year and you get paid, over $100,000 a month or whatever, then it's like hard to spend all that money. But for most people, say I have $1,000 to spend after rent, after all my bills are paid, you have that expendable income. Gas goes to a certain portion of that for most Americans. Some people use public transportation if you live in New York City, whatever, but most people, gas takes up a certain amount of that. So if it used to be $100 for me and now it's 200 or it's 180, that's 80 less bucks or 100 less bucks that I have to spend on other things. So we have to really think about what are those other things that are the first things that people are cutting out first. And you're saying it might be things like concerts or entertainment, things like that.
Yeah, I mean, because the pricing is just outrageous. And I think that they're going to have to do some changes to the car market, big time right now, because, fuel is huge when they're filling up 160 cars, a month. That's times $100. There's like kind of like what you were just saying, like there's increases that are coming from a lot of different angles, and it's not just the gas. It's the milk, it's the cheese, it's the chips, it's the pop, it's the
right.
I mean,
it's
jokingly, Lunchables were 99 cents.
Example.
They're $2 now. Like people my daughter, she's like, I want a Lunchable, and I'm like, nah, we'll make our own Lunchables. Like little things like that, and it's when it all adds up to a point where it's almost like it's going to pop here soon, and I feel like there's going to be a lot of people sitting at home. Over the next probably 12 months, there's going to be a lot of people sitting at home, not out spending their money, not buying jet skis. You can't even go boating. I mean, how many friends I have right now that have boats that are like, I used to love boat season. Now I don't even want to look at it because I can't afford to go fill up $600 to take my friends on the water for a day.
Right. No, it's insane. I mean, and that's why I'm hoping, that's why I'm kind of betting on CPI to be lower tomorrow, just because I don't want to be in that situation where we feel like we're all screwed. And if it comes in lower, then I think there will be some investors, some economists saying, okay, this is a really good sign that 2 months, month-over-month inflation has dropped. That could be seen as a very good sign.
I see a lot of loans that are going to be going back too, like maybe the banks might be taking a hit here over the next future over the next 6 to 12 months. I think you're going to see a lot of people defaulting on their loans or pushing payments back, things like that.
Yeah, that could definitely get interesting. I mean, I think if you look at just the chart of like credit card debt, that it's been at the highest it's been at for a very long time, which has historically not been signs of like a very strong or good economy, but at least it's a sign that people are still spending money, I guess, for the good, and good news for the companies and good news for the bottom lines. Yeah, that goes to saying margin calls might be coming in. I just watched the movie Margin Call the other night, and I'm also reading The Big Short, so I'm like very in this like 08, 07, but I also at the same time don't think that's where we are right now at all. I don't think that really we're at risk of that type of recession, but I also could be wrong. Who knows? Someone's asking about FedEx. We did have someone in the chat the other day that worked at FedEx say FedEx was still hiring like crazy, and that's what I was saying. Like, I don't care if I see so-and-so tech company Carvana or whatever, like laying people off. I'll start to be worried if I see Walmart, if I see FedEx, if I see UPS, like the actual companies that are producing a lot in our economy, start laying people off. Then I'll be really worried. And someone said that FedEx was still hiring a bunch. I wonder if they're in the chat right now.
Yeah, I know Walmart had just announced local. I think they're making like 5 or 6 or building 5 or 6 fulfillment centers right now. So they're building, that was kind of surprising, but
I know that's why it's so tough, is because you get all these like headlines that like on one side it's like, oh, things don't seem too bad, and then like you see another thing and it's like, holy shit, we're about to crash and burn. So it's just very hard to have like a highly convicted position one way or the other right here.
Someone said Apple. Jokingly, I did see that the Y2K search has been like trending on Google, that people are trying to look up like what was like what we were wearing during like the 2000 like Y2K, and they said that like flip phones are coming back. So I was like, I've been kind of actually thinking about like Apple and like different companies, like the cell phones, like what are they going to do like that's going to really wow us? Like what's the next product? And I was like, are they going to come out with like an all new line of flip phones and like completely like people are it's going to be like I mean jokingly, I mean it could be like a thing. If it becomes a thing, then people are going to be out trading their phones and buying new phones again and switching up just to be with the newest trend.
That reminds me, I was at the AT&T store the other day, and this guy came in, and a guy and his girlfriend came in, and the AT&T rep was trying to sell them like phones, or the girl wanted a new iPhone. He asked the guy, "What phone do you have?" And he pulled out this like tiny little, like it was like a tiny little phone, and the guy was like, "What the hell is that?" He's like, "It's called a light phone. It's like a dumb phone. Like essentially you can only text and call on it, no apps or anything." And I was like, that's actually kind of cool.
Yeah, it's like a burner phone. Like for
Yeah,
drug
it's like
dealers.
you don't, for people that don't, for
What's
people
it?
that
He's a street pharmacist on the side.
no, it's probably the opposite. It's probably that he spent like way too much time on his phone and was like, I'm done with this, and then like got this dumb phone.
I know. Sorry, that was funny.
No,
Yeah,
but I
probably
think the same thing.
Probably. But I'm gonna jump off today because I do hear the kids yelling. But I
Yeah.
appreciate you guys having me in. Okay.
No, I appreciate you hopping on.
Yep. I'll see you next week.
You as well. Have a good one. All right, guys. That was Jesse Kaylor from Elite Trading. Go follow or go sign up for his Discord. I'll drop that link in the chat. Jesse's a great guy. Knows what he's talking about when it comes to charts, when it comes to stocks. I'm going to go through some numbers real quick. We're going to do a quick run through on the just on the overall market. I was looking at FedEx right here. I you know, especially hearing people in the chat saying FedEx is still hiring right here, it seems like, you know, shipping costs have come down a lot, right? For like one truck route 6 months ago was like 50% higher than it is right now or something crazy. But with that said, I mean, FedEx is still cheap. Look at it, 11.4 PE. You got a dividend. I mean, this is one of those companies that like I just have in my portfolio and hold. Like this to me is like a Lowe's type company where, you know, I can just feel good about buying and holding it. And I also do think Lowe's and Home Depot are interesting down here. If you guys have been following the housing market, essentially the mortgage rate has been rising at a very fast pace. And so now people are, you know, less incentivized to go out and buy new homes. So if maybe you were looking at buying a new home and a year ago the mortgage was, you know, $1,500, and now with the rising interest rates, the mortgage is $2,000 or $1,900, and you can't afford that extra $400 a month, what are you going to do? You're going to keep living in the place you're living. So a lot more people, to me, are going to start doing home renovations as opposed to buying new homes. And Lowe's does benefit from building new homes, but not as much as some of these other home builder companies. Lowe's benefits more from people remodeling their homes, right? Kind of like your do-it-yourself projects, and just everyday like handyman and carpenters rely on Lowe's and Home Depot to pick up supplies like throughout their work, especially if they, you know, forget something on the site, whatever. They got to go to where they go. They can't wait for whoever their company's supplier is to supply the drywall. They just got to go get some. So I think as more people remodel their homes because of the higher interest rates, because of the higher mortgages, that Lowe's, Home Depot, companies that, you know, produce like roofing materials, things like that, could all benefit greatly from that. Aaron Bryan saying Home Depot is greater than Lowe's. I mean, I think, you know, Lord Byron has worked for UPS and FedEx. I think UPS runs way better as a company. I've worked for them too. I buy FedEx every paycheck with the employee stock purchase. Yeah, so like those types of companies, to me, I don't think you can really go wrong between Lowe's, Home Depot, FedEx, UPS. I mean, if FedEx is going up a lot, UPS will go up a lot as well too, and vice versa. Now, that's not to say your returns won't be better if you pick the winner between the two. I just don't really have a you know, kind of not dog in the fight. I don't really have an edge in knowing if Home Depot is better than Lowe's. I mean, it sounds like Lord Byron in the chat has worked at UPS and FedEx, so having like a edge like that would maybe lead me to making some of those decisions. But okay, Christian Gallagher, UPS, and that's the other thing, is if you don't have any insight into which one of these competitor companies is better, then you can just look at the financials and try to find the one that might be a little bit cheaper or pay a little bit of a higher dividend. Okay, that's good intel. Aaron Bryan saying, as a general contractor, Home Depot has better selection and more locations. This is based off of Ontario, Canada. Yeah, definitely. Like I said, I have no that's an edge. If you're a general contractor, because you got to go to these places to buy things. But I mean, it's also, you got to think like Amazon. I was talking about this yesterday. Amazon, Goldman Sachs, after Amazon's last report, essentially valued Amazon's non-AWS business at 0. Sometimes companies pay to offer that convenience to customers. So maybe Home Depot is doing a better job keeping its store stocked than Lowe's, but they're paying more to do so to try to make sure those customers are coming back and their margins aren't going to be as good. I have no clue. I'm just saying sometimes things like that can be the case, where as a customer, the company that is providing the better service to the customer might be spending more money to do so. So like that can be reflected in stock price. All right. I see my man Money Mitch hanging out in the background. Let's go ahead and get Money Mitch on the show. Mitch, how you doing?
Where's Luke when you need him, right?
Yeah, honestly, this is actually Luke's day where he's supposed to come on the show, but Luke's up in New York, up in New York City at some like swanky Piper Sandler event or something.
Hey, my man's looking good right now. He's representing. I'm sure he has a nice suit on. So,
I'm sure he does. I'm sure he looks great. Oh, Andy O saying Home Depot is a better theme song. Lord Byron saying Home Depot parking lot is always packed near me. Blind Trader saying Lowe's is bigger than Home Depot in Kentucky, in my opinion. I don't know. Like I said, I don't really have an edge. I don't really have a dog in the fight between like Lowe's and Home Depot. But let's see. All right, so dividend yield for Lowe's 1.66, because that's the other thing with these stocks that are like not growth stocks, they're more value stocks. I do want to see who has. All right, so Home Depot's got a little bit of a better dividend. Let's look. What about just market cap? 313 for Home Depot. Shout out Detroit. Wow, so Lowe's is a lot smaller than Home Depot.
It's like a third, almost. A little bit over a third, so definitely overtime, baby. Sound that alarm. No overtime, but hey, that's how we do it, baby. The only way. Hey, you saw AB cover for me yesterday on live trading. We definitely help each other out, and with Home Depot and Lowe's, I don't know about you, Aaron, but like you said, you don't have a side. I'm more of a Home Depot fan, but I always feel like Lowe's just has kind of like everything in stock. Home Depot has more helping hands. I don't really get too many people to come up to me when I'm at Lowe's, but at Home Depot they're always
I mean, growing up, I don't think I ever went to a Lowe's. I would only go to Home Depot. And I don't know if Lowe's has this, but there was always a hot dog stand outside of Home Depot.
Gotta have the hot dog stands.
I liked that hot dog stand. One time I actually used a fake ID at Home Depot to buy spray paint.
That's how you do it. You hear the stories of AB.
Exactly. It wasn't like to graffiti or anything, and I guess that's why they were IDing. But I remember I was like 17 or like 18, and I guess I was like 17 and trying to buy paint, and they were like, you need to be 18, and like, let me see an ID, and I was like, fuck, I guess I'm giving Home Depot my fake ID right now. So
you gotta do what you gotta do.
All right, Mitch, you want to go ahead and get your charts pulled up for a second?
Of course I can. I'll go ahead and I'll share my screens here.
We'll take some tickers from the chat.
Let's do it. Can add mine right here. I was taking a look at that Home Depot move earlier today, and I've been looking for this move above 305. If you want to go ahead and take a break, you can, my friend. I'll hold this.
Yeah, I'm gonna go to the bathroom real quick. I'll be right back in about 5 minutes.
Not a worry, man. I'll bring you back down. There you go. You're in the background. I'm gonna put my screen a little bit bigger here so you guys can see it a little bit. We'll take a look at some of the sectors. We'll take a look at hot stocks. If you guys got something to throw up in the chat, throw it up in the chat. We'll take a look. The sausage stand is better. Hey, gotta have the sausage stand. I'm bullish on the sausage. There you go. I get in trouble for eating hot dogs all the time. Shouldn't eat them that much, but hey, that's how it goes. All right, let's take a look here at what's going on in the SPY really quickly. As I was taking a look, we were watching this on live trading. We were seeing the SPY come on down there, and now it's coming back towards VWAP. So some more chop right here. Seems like we've been getting a lot of chop action here. Let's take a look at Apple. Some of the leaders coming on back there, but slowly leaking there. Microsoft actually having a bullish day. It's actually in the green right now, but we'll see how long that lasts. Google actually up also here. Amazon is a little bit down, but not much here. Not even down a full percent here. Now it just ticked there, but you can see Tesla actually was up a good amount here off of the UBS of kind of rating upgrade. I don't know if you guys caught the Tesla deliveries this morning, but it wasn't that bad. It definitely way better than April, way better than 1,000 cars. It was like 11,000. So they're doing better. We'll see if this can kind of get on up there through the 750. Damn, Mike, sounding like Chuck Barkley. Let's go. What's up, man? I'm sounding like Chuck. Oh, good Lord. I don't want to sound like Chuck. Let's keep going. If you guys got a stock area that you guys want to take a look at, looks like someone mentioned Path. Let's take a look at Path. All right, let's take a look here. Path went up there towards 2169, now going sideways here. It doesn't look bad, right? It looks nice. If you take a look here at the hourly is going to look a little cleaner for us. I love using hourly charts. Let's draw a trend line here. You can see how this has gone sideways. It's trying to break out above the 2150s. Can't get above that right now. Just retrace to the support here. You want to see it kind of reclaim this area. You can see there's a couple bodies down here. And so you could draw the next line. That would be the next layer of support. That'd be my out spot, which would be around 2101. I'd be trying to get in near that line here at 2107, looking for a push back towards 2150s. Now take a look here at the 15-minute. You can see how it's kind of having that kind of sideways action here. That's actually a good level, good way to see it. Now you want to see it get back up here. Maybe you can pull this down here towards clearly the 21 line. You're looking for a move back towards 2150. I understand why you're taking a look at this one. I don't know too much about the actual stocks. I don't know if there's a catalyst today, but Path right here, it does look like it's setting up for a bullish move. We'll see if it gets that. All right, let's go ahead. Let's keep it going here. Kathy keeps adding the Path. Oh, man, I might have to change my mind. You know how you guys, you don't want to get Kathy, do you know? But we'll see what happens there. Or decapitated. That could be another one there. We'll take a look at that. I got no problem taking a look at Path. If you guys got a stock, keep throwing them up. I'm here for you guys. PK, Park Resorts. Take a look. Not a stock that I trade often, but I'll take a look there. The REITs and hotels and motels here. Take a look at the monthly. When a stock like a REIT that goes like sideways often, you take a look at the monthly. That's going to help you take a clearer look, right? And so you can see here, it's actually been going sideways pretty well here. You can see you got a move up, it pulled back, a move up, it pulled back, a move up, it pulled back, but it actually held this wick down here, and now you want to see it take out this body high, which is around the 1990 area. When it does that, I'd be looking for a nice move through 20. I wouldn't get too crazy about this too early. It seems like it doesn't move too much, so what you want to see is a clear definition of breakout, and to me that's above 1990s with a close above 20. So we'll see what happens there. The ghost has short it. I don't know if he was talking about PK or the other one, but hey, I'll definitely mention your comment. Let's keep going there. FH bringing in CCL and NCLH. I will let you know, guys, I wanted to get on the Royal Caribbean cruise, but I actually delayed it, took the credits, and looking forward towards eventually going on the cruise. But let's take a look here at Carnival. How's it doing right now? It was down there really close to that pandemic low. I'm actually going to put a line there so you guys can see where that pandemic low is. And we're almost to that $8 area. So you got to be careful with these because it just doesn't look like it's coming back. For a little while there, you saw kind of a symmetrical triangle breakdown on this CCL. You could see here it's kind of like a rising wedge, and then it broke down towards the downside. You got to be careful because what's to make it say that it's going towards the upside? For me right now, I think it's going down to test this 1165 and could keep coming down towards those pre-pandemic lows near 836. All right, let's keep it going. Thrifty. Got to trademark that. All right, let's go. Molin action. Some Molin? I don't mind taking a look at Molin. Let me take a little sip of coffee, a little power up. Nothing like a little coffee action. Was struggling today to get the coffee working, the coffee machine up. So happy to have a nice little coffee today. Let's take a look here at the hourly chart from Molin. So you guys see how I go to the hourly often. The hourly is my favorite chart. It's going to help you a lot of times determine where kind of the real resistance and support. What I mean by real resistance and support is that, of course, there's no real resistance or support, but what I mean by it is that a lot of times we look at these really small levels on the shorter time frame, and we want to see some bigger time frames add up to, like, let's say, daily levels. When you get that multi-time frame in the same level, that's going to help you really see where the bullish side and the bearish side is. So for me on Mullen, you can see how it's coming on down here multiple times. Now it's come through this support multiple times and come right back towards 122. You can see here, you even wicked through it and you went to 120. But what did you do? You closed there, right back up there towards 124. So we don't want to see a close below that 120. That would be where it starts breaking down the chart, and it could break this low here, 117. And then you could go into what they call a shadow fill on the downside. That would be a move down into this area. But what we're looking to see is that it gets support here and gets a little bit of volume. Because if you take a look at the volume, it's just been tapering off. And if you take a look at that volume, you want to see some volume come in here as it comes off of this bottom. And then when it starts breaking out, which would be a move, let's say back above 132s, getting into the 137 area, and then 140 is where I really expect the volume to come in. That's where you want to see a nice spike in volume. You're looking for something like a bounce on an hourly candle of, let's say, like 20 million shares. That's what you want to see. A big green candle show up on the volume as it comes into the breakout, showing you confirmation for the upside move. If you take a look at the RSI moved up here towards a peak when it popped towards 82. And it's been on a trend line. You can use this to determine confirmation. So you can draw a trend line here on your RSI. You can draw, I like to do circles where I see touches just to give you the idea, okay, so this is where it's rejecting. And another thing is, look at those price points where it rejects. And understand that that's an important thing of RSI too, is understanding where those rejections are happening. So you can kind of actually see this as kind of a bottoming action around here, around this 25.59. And we shouldn't get below that. We should actually make a move somewhere in where we could pull back a little bit, but we want to see that move go right back through that 50 level. And that's going to give you that confirmation. So we're looking for that move to come right into here. And then eventually it does another move back out towards that high. Of course, this would lag a little bit. As you can see, it's coming on down with it. And when it peaks, a lot of the times it still went up here, but it didn't go that much up on the RSI, showing you that it's topping out. It has a shorter push towards the top of the RSI. Just going through a little bit of ways that you can look at it, even a stock like Mullen. All right, I'm going to do a little bit more of some stocks before AB comes back. How many stocks can I get through? So Verb Therapeutics here. Let's take a look here, and I'll use the RSI example on this again. We can use that. Let's take a look here at the daily. You can see here some topping out action here. Where this broke down, this was the start of kind of more of a bearish trend here. So you can draw a trend line here across, and you can see how every time you come up near this level, you failed. And so what I would draw now is kind of a rising trend line through here. And you're looking to see if you break through that line on the downside. That's a break towards the downside that you don't want to see unless you're short. So you want to see the stock kind of battle here. And you can see here you've had multiple times to try to come down. Then you came up to the trend. Then you came down to the trend. Now you've come up back to the trend. So this is still an up too. So you could still see a little bit of that kind of shaking kind of volume right back up to 15, then right back below. But you got to kind of really see it break out above here to the 17 if you're looking for the bullish side. If you're looking on the downside, you're looking for a close below 13 into the 12s, and then you could come back to take out the lows over here around 11.47. All right, guys, let's go ahead. Let's keep it going. Oh, AB's back. I didn't get to too many stocks. I got to some of them. I got a couple in there. I think I got like 5.
We can keep doing tickers for a minute.
Let's do it. I'll roll through. You can tell me if you. I'll like give my technical view, and then you tell me if you got any view on them, and then we'll just keep it rolling here.
All right.
So you pick one. Pick the next one up. I just finished Verb. VERV.
Okay, have we done a firm yet?
A firm? No, we haven't. Let's do the firm. All right, so Affirm, let's go ahead. So this is the price area where I really thought Affirm could maybe turn back around, and then it actually got a volume pop, a nice little price pop. But you can tell what on this chart, every time you get those pops on Affirm, it's been moments to sell because it's been literally pops right into it, crushes right back down. Same thing happened here in April where it started coming back up, and what happened? A couple days towards resistance, and then boom, crush right back down. And so the same thing is happening here. We finally got a little bit of a rise, but then what ended up happening, it broke that trend right around here. And now you're starting to see it's using this 25 as a resistance right now. And so when that starts happening, you could see it has more of a pocket here to break through this down shadow fill. And so that's what I would be looking for right now is a trade down there towards 18 on the downside. Just looking at it how I see it, this is still looking really bearish right here. And it's almost looking like it wants to just cut through here. And yeah, it tried to get on up there towards the 30, but couldn't even hold up there. And once you started seeing that breakdown, look how you get this volume to actually decline into the move here, showing you that there's no one buying this up right now. At least I feel like there's no one buying it up. If anything, there's shorters that have been short right around this area where the volume increased. And they're holding on towards above here, levels like, let's say, 25 or up here towards 30. That's where the risk is for the shorts right now. And so if that breaks, then yeah, you get a little bit of a green line. But for right now, I'd be looking for a downside shadow fill on the firm.
Yeah, I'm pretty much with you there, Mitch. I think looking back on Affirm a few months ago, or about a month ago in May, when kind of all growth was getting hit, Affirm got below $14, I believe. So
Yeah.
I'd be interested in Affirm kind of down there in that $15 range if we get down there, because then I can just buy it, set a stop loss at our previous low, and then let it ride and see if we bounce off there. And then if we break through the low, boom, I'm out of the trade, and that risk is very limited.
Definitely. And we know how shadow fills have actually been working lately, right? Like where you get those shadow fills and then the stock retraces from there. So we'll see if a firm gets into that level. And I agree with you. Down by 15, it does seem a little bit more interesting. Now, of course, there's different kind of finance worries that were put out. I'll give you guys a little background on the firm right now. Stripe owner, CEO, right? There is a fintech conference that's going on right now, and he gave a lot of warnings on that his company wouldn't have the same valuation that it had, let's say, 2 years ago when it wanted to go public via SPAC on IPO. And there's multiple companies in tech space that are now asking for kind of like money. They're looking for money out there, and they're looking at valuations like half or 40% lower than what they were, let's say 2 years ago. So these fintech companies are really struggling right now. And that's why you see companies like, let's say, SoFi down there towards $6 and looking like it wants to head down a continuous amount. And comments like this, when you see private companies that don't even want to go IPO because of the worries of valuation, it's a clear example where you got to be careful.
Right. No, 100%. We're kind of seeing that across the board, whether you're talking about private markets, public markets, just valuations dropping.
Look at that chart. That still looks horrible to me. And I think we might get a chance to get squared back down to like 40s. When it used to be in this long time consolidation between 2018 and 2020. So,
Ryan Mulligan's asking about some of these shipping stocks like
let's take a look.
Zim and well, those are more I think those are more like maritime ship, like actual like ships, not just transportation in general. Basically, all the costs of all these shipping and like shipping containers and freight over oceans just skyrocketed during all the supply chain issues during COVID, and a lot of those prices have kind of started coming back to earth, at least a little bit. So a lot of these companies just for a while were like running such high margins because the prices were so expensive, and now are dropping a little bit. So I think that's why you're seeing these sell-offs. They do offer very attractive dividends. They're cheap for the most part. Let me check out some of Zim's actual numbers. Yeah, so yeah, I mean, it still says Zim is trading at 1.2 PE. Like, I don't even know if that's right. It's so, and then like the dividend yield is showing up really high. So I don't know. I mean, I think it's interesting, but I think there's a reason why these stocks are trading down well off their highs. I mean, Zim hit highs of $84 back in March, and now it's at 54. Or actually, sorry, the 52-week high is 91.23, and now it's at $54.
That just shows you guys. And one thing that I'll show you guys on that Zim chart is when you have a long-term trend break, that's really when you can start seeing some continuous downside. And so this stock was trending up. And then it started going through some struggles here, right? And then some people can call this like a head and shoulders pattern. It turned down and it broke through that line once. And then it tried to keep coming on up here and trying to fight that line. And it fought that line a little bit. It got on up here, it got on up here, it got on up here. But when you see 3 or 4 tries, and then on the 4th try, you don't see a continuous move back towards the upside, that's when I really say be careful, because you can see 3 moves right here, right? It pulled back down below it. It ramps a little bit. It even got volume here. Look how the volume went up there. And then when it tried to break out here at 70, that hard fail there is what really starts giving you that fail look. And now you're failing right where the trend had broken to in the past. And that's when you're starting to see, okay, boom. Now they're really smacking it. Now they're smacking it down. And you're heading right back down towards those lows around 50, 52. And from that level, you just got to keep looking at the next major support. It could come down to 46. And then from there, it could be down to 35. And that's where you really got to be careful. Once trends break, this market is really, really bad once those trends have broken. A stock that scares me is like Apple, because Apple had the same kind of long-term trend. And now we're starting to look like we want to come heading right back down. So that's really when I get the warning signs. But let's look into other shipping stocks, because that's what you asked me to also. And you can see today, what's getting hit the most? Down 4% there in this industries, in industrials, and it's shipping imports. They're getting crushed. They were heading on up, and now the trend looks like it's completely broken here. You can see this pullback. Now, of course, it could catch some support here, and this is the index for shipping imports. So let's start taking a look at some of the leaders in shipping imports and see if there's any of these that actually still point to the upside. KEX here, also showing you what? Heavy turnaround. This one needs to hold the bottom of that candle 68 for it to keep holding on, but definitely heavy turnaround there. Look at this Madison. This one tried to get back up there to the 100, rejected. Now looks really bad. Golden Ocean, also really bad. Gave you kind of this hangman at the top here, inverse, or you could call it a doji, and then boom, turn around and right through that support. Couldn't even hold at that 1479, right back down. So I'm seeing some weakness here, relative weakness. That's what you look for in relative weakness. When you see, hey, there's not just one of them that's showing me this crackdown. This is a hangman candle. That's called a hangman candle right here. So when you see that top of that body with a long wick, doesn't it look like someone just got hung in INSW? I mean,
Yeah.
Right? Doesn't that look like it, Aaron?
No, it's exactly what it looks like. Sorry, guys, I just smashed that spammer in the chat.
Yeah, they try to get us when we're busy.
No, I know they can't sneak by me though.
Boom.
Yeah, I think we're all watching the CPI. It's gonna be huge because it's like I said. I think that more symbolic than anything. If it's lower than it was last,
this could be leading to that. This could be leading to that, right? It's kind of like a forward look. Like, we're not saying we're right here, but maybe some people are thinking that inflation has topped. And so one of the areas that's a focus, right, of the inflation number tomorrow is going to be shipping and those costs that you see with that. And so this could be traders trying to take profit that rode this wave up, and they're worried about their profits. So they're taking profits now versus when the CPI data comes out. Just kind of think that why would we see this turnaround in shipping now? Could be it. All right, let's keep going. Let's take a look at maybe 1 or 2 more stocks. I'm willing to stick around. We can go towards one. We got a couple minutes left.
You're gonna hop whenever.
Let's go to one. Let's go to one. We got a couple of minutes left. Which one do you want to talk, or is there anything you're taking right now, Aaron? Maybe we take a look.
Let's see. I'm kind of interested in Baba here. So Baba has news dropped.
Awesome.
I believe it's down like 7% today, and kind of all of China's been down today. But Baba's been in an uptrend like as of the past week or 2 weeks or so. So to me, it's like, is this going to continue to show strength, and this is an opportunity to kind of buy the dip of a larger uptrend, or is this a potential reversal and we're going to give up a lot of these gains?
So I'm gonna actually call this candle the DD push. Why is it the DD push? Because at the end of the day, that was when we started getting that Monday push candle, where DD started talking about, and people really tied the headlines together, saying that potentially China was turning around on this tech crackdown. That's when I started thinking that maybe it's the time is now. Reason why I thought the time was now is because Baba put it in that fourth bottom. I always look for fourth bottoming effects. So just like I talked about it on the upside, turning to the downside, let's talk about it on the opposite side here for Baba. So you get a one-time action where it really broke down here at the 80s. Then it comes over here, tries to make another bottom. Then it comes one more time, and now we have our third bottom. Always look for that fourth try to break through it. But if it fails, look for that reverse action. That's what I look for all the time. Look how you get this next fourth action right here where it tries to break down. And right there, boom, it starts turning back around. It could be because of earnings. It could be because of a lot of things. Those actually are going to give you more confirmation for the technicals to match kind of the story. And then that should help you get into the trade, higher conviction trade. What I always try to do, the 3 variable trade: story, fundamentals, and technicals. So if you can combine all 3, that's a high conviction trade there. That's where we started seeing the reversal. So the action started going up there towards the 100. What we didn't want to see was a huge smackdown through the 80s. And that's not what we're getting. We're actually getting volume to go into the breakout above 100. And that volume that came in yesterday was actually significant. It was pretty good volume. It traded 94.4 million compared to the day prior where it only traded 35 million. So about 2 times more, or a little bit more than 2 times the volume. I think that was buyers getting in. Where's our opportunity? I would look at the 9 EMA around here. So it pulling back around the 103, filling in this gap that it did the gap up on, and then coming right back through 120s. That's what I'd be looking for.
Yeah, no, I mean, I agree 100%. I think it's a good sign that we're seeing volume coming in for Baba here. People willing to buy it on this dip. But it's just so tough investing in China right now, and I mean in general, because you never know what they're gonna do, what's gonna happen next. So always
it's a risky game.
risk. Oh yeah, always a risk to be aware of when you're touching China. But I do think at one point, I mean, when Baba was down at like the 80s, it's like, this is like so cheap. This is a huge, massive company. Like, it's so cheap. And like,
and the earnings are not that bad anymore. The forward-looking earnings for Baba, they're not that bad anymore. I don't know if you've seen that, AB, but they're really not that
yeah,
high.
I know they came out and said like a couple weeks ago, essentially, that even though people have been locked down in China, people are still spending money. So that's a good sign for sure.
Yeah, and one of the things that you'll see is that a lot of this was kind of them getting hit for kind of the way they were going to consumers and stuff, and China took a lot of money from them, but it could come back roaring. And I don't think that a company like Baba is going away anytime soon. They just have so much infrastructure, so much tech that of course they're going to keep battling maybe with the Chinese government, but I do think it's an opportunity. And I'll give a shout out to Mark Yusko because I'll give a shout out to him here because he talked about how sometimes you need to look at the markets that are suffering the most at the time to look for the best opportunities. And so maybe this is an opportunity for us on a beaten down market. The Chinese market has been beaten down pretty bad in the last 2 years. That maybe this is our opportunity to get it at a beaten down evaluation, and then eventually, keep looking at different markets like the US when that's finally bottomed versus looking at something that it looks like it is bottoming, which is the Chinese markets.
Definitely. And I mean, it's a lot of times, like those riskiest investments, the ones that are the scariest, end up paying off the most in the long run. I'm not saying that's the case here. I'm not saying, oh, everyone go buy, China stocks right now. No, that's not what I'm saying. But there's that famous Warren Buffett quote where he says, "Buy when others are greedy, or sell when others are greedy, and buy when others are fearful." So, definitely could potentially be an opportunity here.
Yeah, definitely. It's something that I'm definitely learning from. I don't know about you, AB, but I've never really invested in international markets, like different, like let's say, like like we're trading in Europe or trading in Asia. I haven't done that, but I'm going to really start thinking about that and trying to evolve my trading to where we can trade, different markets. Why not, right?
Yeah, and that there's always, to me, like emerging markets is a very interesting opportunity because here in the United States, we have the biggest GDP, kind of the most advanced economy. But there are other economies that are actually growing at a faster rate because they are smaller, right? So if you look at like the rate that some of these economies, like in India, for example, have been growing over the past 10 years, it's actually been at a quicker rate than the GDP in the United States. Larger in the United States, but just at a faster pace in some of the other emerging markets. So it makes that investment opportunity kind of enticing and interesting. So that's a good point, Mitch. Maybe I'll have to do a segment here on Benzinga Live, just breaking down essentially the different emerging market trades and the kind of pros and cons of each one.
Definitely. I think it's a great topic and something to learn from. And if you haven't thought of that before, it's something to think about because markets love to move in like waves, right? And so there has to be also probably a bottoming of the Chinese markets. And you can see here from like this chart on CWeb from the peak, let's say in February 1821 down to where we are now. Of course, this is a 2-time leverage. It's about 94%. So what's not to say, how far is this really going to get down? And I mean, there has been some sideways action on here, and I see some, three or four bottoming actions here. So I don't see it as a bad attempt to actually start looking at Chinese stocks. Of course, always diversify. That's the key here that we're trying to talk about too, is maybe diversifying some money into different international or emerging markets is going to give you that opportunity to catch a wave away from just even what's going on right here in our home.
100%. All right, Mitch. Well, I appreciate you hopping on. It's always good to get on stream with you. Hope you enjoy the rest of your Thursday. How's the move going?
Hey, finally in a new place, at least with decent internet. As you guys can see, I got the upload speed. No more Starbucks. They kicked me out. They told me I'm banned, but I told them I like bros anyways. So
there you
peace
go,
out, guys.
Dutch bros, guys. All right, Mitch. Take care. All right, y'all. We've got a few stories to get to on the rest of the show today. One thing that I wanted to talk about that is just a little bit not, perfectly related to the markets or finance, but there's a money side here too, is what's going on with this new golf league, right? If you guys have not been paying attention, so the PGA Tour today suspended players that have left for the Live Tour, which is this new Saudi Arabian-backed golf league, and they are paying the golfers from the PGA Tour just bonkers amount of money, like billions or not billion, millions, hundreds of millions of dollars to go onto the tour. Today is the first day, I believe, of the actual Live Tour. It's streaming live on YouTube. You can see right here. I was watching it a little bit earlier. I'm going to turn the music or the volume down just so it's not, we're not getting both. To me, it's cool to be able to just watch live golf like this. You are looking at Phil Mickelson right here live on YouTube. But it seems kind of like low budget production. You know what I'm saying? Like even like the scoreboard, like it looks like kind of cheap. Like, I don't know. To me, I'm not very impressed with the actual production. I'm happy, like I said, being able to watch live golf just like during the middle of the day on YouTube. But, yeah, so Phil Mickelson reportedly got like $200 million or something. Dustin Johnson got 150. The Live Tour offered Tiger Woods more than like $700 million. I mean, think about this. He offered getting a check for $750 million to go onto this tour and didn't do it. He didn't do it because he knows how damaging that would be to his reputation. Yeah, Tiny Pie. I thought the same thing. Yeah, so it's a Saudi. The league is put on by like the Saudi Arabian, for some people over there. But they're playing. They're not playing in Saudi, at least right now. They might do it. They might do a tournament in Saudi at some point. But it's really just going to, I think, kind of reshape. If this becomes successful, then it might reshape how sports. I mean, like, what's to stop the Saudis from coming in and doing another? Yeah, no, Dustin, 100%. I think it's very, well, I mean, I don't. It's one of those things where it's like the players obviously can choose to make that choice, but a lot of them, including like Rory McIlroy, have been outspoken against the league and the Saudi. So it's hypocritical seeing that some of the people here in the U.S., at least in terms of like lawmakers and stuff, could call out the Saudi Arabian government while we're simultaneously selling them weapons. I 100% agree. But this has nothing to really do with that. It's more just these golfers who already were getting paid hundreds of millions of dollars. Some of them, if you're Bryson DeChambeau or Dustin Johnson, pretty good shot there. If you're Dustin Johnson or Phil Mickelson, already making millions and millions of dollars, and then you take essentially this like dirty money from Saudi, which again, like we're already doing business with them, whatever. But they're taking just purely for the money. It has nothing to do with the golf or the competition or anything like that. So I think that's where a lot of the criticism is coming from. It's just that it's so purely and obviously just about the money that some people are a little bit upset by it. But again, it's cool, I guess, to be able to watch this golf. I don't really care about, honestly, any of the players that like have left for this tour. Like Phil Mickelson's exciting, Dustin Johnson, yes. Bryson, people like to watch him, but I personally don't care. And then outside of that, like I don't care about Ian Poulter or Schwartzel or any of these guys. And there are a lot of good young players on the PGA Tour, so I'm not real worried about it. Or I just wanted to talk about it for a second because it is the first day. It is newsworthy. If you were wondering why it's called LIV, L-I-V, it is the Roman numeral for 54, which is the amount of holes in every tournament that the tour will be playing. So instead of a 72-hole tournament, which is 4 rounds of golf, they will be playing 54-hole tournaments, which is 3 rounds of golf. Yeah, 30. Let me know if you had any bets. I had some bets on the basketball game last night that I lost. Been a rough couple days sports betting, although I will say, while I lost most of the bets, I bet a separate bet, like in addition to the original bets I put on the game, just on the Warriors third quarter, which was like the most free money bet of all time because the Warriors just historically, like even when they were winning championships in 14 or 15, have been a really strong third quarter team. They come out of the halftime just ready to play. So I threw another bet where I was able to kind of recoup some of my losses by just betting on the third quarter there. All right, let's get back to, so I was on the Washington Post earlier, and this is one of their headlines on their site. Nearly 9 in 10 Americans say they are feeling inflation's pinch. I definitely will say that I have seen it and felt it the most at the gas pump. Right. And I don't think that's just for me. And I was kind of going on like not a serious rant yesterday, but just saying like what are you going to do? Like you're going to fill up your gas anyway. There's nothing you can do about the price. You can fill up your gas tank without taking a picture of the gas pump. Like I just see too many pictures now on Twitter, Instagram, Snapchat, people texting like pictures. Like we get it. Gas is expensive. We know that. Outside of that, I think I've really noticed certain things that have gotten more expensive, mainly flights, which right now I've actually seen have come down. I'm flying back home to St. Louis later in the summer, and I was looking at flights like 2 weeks ago and was like, oh, I guess I'm driving. The flights are super expensive. But then I looked again yesterday, and the flights had come down a bunch. Like I'm going to fly now because I don't want to drive. If I can fly for a round trip, $150 or $200, it was like $500 when I checked 2 weeks ago. I was grocery shopping the other night. I was at Trader Joe's, which is it's like in Aldi's. I thought they were run by the same company, but I guess they're not. I guess they were brothers that broke off, and one started Aldi's, one started Trader Joe's. But I made kind of a joke because the cashier like rang it up and it was like $68, and I was like, oh, I think I can handle that. And he's like, I'm glad you said that, because I've been having more and more people like having to put stuff back and whatever. And we were kind of talking about the prices of some of the goods, and like the $2 chuck is like a $2 bottle of wine that they have sold at Trader Joe's for a while, and that was like $3.99. And he's like, yeah, things like that. But for other things, like I forget what it like the bananas were like still like 25 cents each, and he was like, yeah, Trader Joe's has said like they're not changing that. I thought, like, walking around the store and looking at prices, like I was actually surprised at how many of the things I was buying was like, oh yeah, that's like very, very reasonable. Like, buy a bag of like baby spinach for my smoothies was like $2.99. And it was like, yeah, that seems like a fair price for a bag of spinach, $2.99, but I'm very much anticipating this CPI tomorrow, and I think a lot of people are. I'm hoping it comes in lower. Again, I'll reiterate that point, just because I think it will be seen as kind of that symbolic. Oh yeah, those Trader Joe's. Yeah, TJ's, they run a good operation. They have like things that are like pretty cheap, and they're usually pretty good. The inflation, again, I'll reiterate that point, that it'll just be seen as kind of not symbolic. It'll just be seen as kind of a like, okay, if we get 2 month-over-month lower inflation numbers, then that would be seen as, okay, this is potentially a top in inflation, which I would love. Oh, holy cow. All right, guys, I'm going to stop sharing my Washington Post, share my Robinhood. So I told you guys earlier, I was holding calls on like Southwest going into today, the airline LUV, and it was not doing well. And I cut that position today and I got out of it, but my portfolio is coming back. I'm down only $87 right now on the day. I bought some Baba calls that expire tomorrow. These are just YOLOs, but I think I bought them like down here or something. So we've had some positive price movement since I bought them, up 13%, $100 on them right now. But I'm going to continue holding on to these just because, again, they were a lotto, and I'm doing the same thing with the Q calls. I'm definitely like here. I'm not bullish like on the market short term right now. I'm just playing for a little bounce here. I bought shares of, and I don't typically do this, just buy shares of a company, but I wanted to with this one because it pays a pretty good dividend, 6.56% yield on its last payment. And I just bought this because I may have mentioned this on the show, but I'll talk about it more. So one of the people that I follow closely in the financial news, kind of financial information space, Joe Wiesenthal, a reporter at Bloomberg, he runs a podcast with Tracy Alloway. They're great. It's called Odd Lots. They basically have different experts on. I think they do it twice a week, and it's an hour long. It's kind of wonky, the podcast, in the sense that they get, very into the weeds about like they'll have a guy on who's a bond yield expert and talk about bond yields for like 45 minutes. So I like it because a lot of these topics I don't know a lot about. And then like after listening to the podcast, it's like, okay, I have a much better understanding of that. And they had Sam Bankman-Fried on from FTX to talk about different, yield, how different crypto stable coins were doing. This was before Terra Luna crashed, and like a lot of good information from there. But they did an episode a couple weeks ago with a guy from Bloomberg who's like a precious metals reporter or analyst, and it's all Bloomberg, I forget where he's from. But he was talking all about copper, and basically how copper is very much like overlooked right now. That copper is being overlooked by investors, that copper is being used like not only in new homes being built, obviously, but also just in essentially appliances, EVs, everywhere, and that copper will over the next 10 years, he says, have the potential to like 5x or 10x. I forget what the exact numbers are, but it had me looking at different type of copper stock plays, and this is the one that I ended up on, Southern Copper, ticker SCCO. SCCO. Let me throw that ticker up on the screen. So I got into this just the other day. I'm down, I think, like 3% on it right now. Yeah, I'm down 2.5%. But I think I'm going to hold this one for a while. I mean, I think right here is a very much defined stop loss. If we get down below 54, I'll bomb out of it and say, okay, I'll take that loss, but then, you know, monitor it back there to see if we can get that double bottom reversal. But yeah, I mean, I like the fact that this play, it comes with a good dividend. It seems to be in an uptrend. I mean, up 5% over the last month, but of course, right when I buy it, it draws down 3%. So that's really the only stock I'm holding in this portfolio right now. I have also been watching Array. So Array Technologies is a solar company that does technology to allow solar panels to optimize its position against the sun. So essentially, think if like a solar panel is facing this way, it moves as the sun is moving to capture as much solar power from the sun as possible. And so what Array has, it has contracts with a bunch of the biggest solar companies. It has contracts, I believe, government contracts as well. So you have kind of this guaranteed revenue. You can see down here the light green is expected earnings. The filled in green is actual. So they missed 2 quarters in a row, beat last quarter. You can see to me like that if you look at the actual earnings per share, it's been growing the past 3 quarters. So that's a good sign to me. This stock got so cheap like 3 months ago, like insanely cheap. It got down to $6. It's already at 14 now. So it's gone up. I mean, look, 103% in the last month already. So I think that's enough to scare some investors off. But if you really look long term, I mean, look, this was a $26 stock in November of 2020. We crashed all the way down here. Looks like we had a little double bottom where we tested those lows twice and have come back up and actually gotten through this previous resistance of $13. So to me, there's no reason that even though the stock is up, you know, 100% over the last month, doesn't mean that it can't continue to move higher, especially at least to this level right here, this kind of $25 level, where we will either then hit that and resist and not be able to break through, or you know, continue to break through there and just make a move higher. All right, let's go do another run through. What's going wrong? What's going on? All right, my Baba calls are giving up some gains, but that's okay. That's okay. My Qs aren't doing as well either. Let's check in on the Qs. Down only about 1/4% right now, but it looks like we're giving up some of those gains from that little bounce that we got. Christian Gallagher, that's a good question. I'm going to assume so. Yep, the Rangers and Lightning Game 5 series tied at 2-2 will start at 8 p.m. Eastern. Yeah, I don't know who all watched the basketball game last night. I was kind of pissed off because we're in Eastern time zone and the game didn't start till 9 p.m. 9 p.m. Eastern and a game that starts in Boston. Like, I understand, you know, when the game's in California, starting at 6 p.m. California time, 9 p.m. Eastern time, because the game's in California and you don't want to make it at like 4 or 5 p.m. But when the game's in Boston, like, at least make it 8 p.m. Eastern time, because what if people in Boston want to go to the game with their kids and the game doesn't end until midnight, it's a school night and all this stuff. It's like the Cali bias is just insane that they're willing to start a game that late, that, you know, it's 9 p.m. Yeah, Dustin, I get it. There probably is like more viewers like throughout the country, but for anyone in the East Coast, which is some of the biggest markets, I mean, if you think about New York, Miami, Boston, all through the East Coast, starting a game at 9 p.m. that's going to go to midnight or 11:50 p.m. Sorry, 11:50 p.m. on a Wednesday night is just very tough for a lot of people, myself included. Like, I try to get into the office around like 8 a.m., which means I have to get up around 7. I didn't today because I was up watching the game last night. And so, yeah, I mean, there might be more people across the country that... What are you looking at me for? Aaron Thomas is looking at me funny. All right. We are going to play a cool interview we did with Brian Shannon at the FinTwit conference. We just have to... I'm waiting for word from my producer that it's ready to go. Oh, how's Ford doing? Let's check out Ford. Whoa, it's not Ford. There's Ford. I mean, Ford's cheap down here. It's just so tough because it's like if I buy a bunch of Ford because it's cheap and it's a good dividend for and I think it has a good growth aspect, but then we do get a downturn in the economy and people aren't buying trucks. I'm gonna be down 30% of my position. It's not gonna matter that the PE is 4.5. So I'm kind of waiting. I do say that's like the one thing is I will say I'm sitting on more cash than I typically would. And honestly, you know what? I'm gonna do this. I'm gonna sell some of these. I don't know. I'm gonna sell some of these copper stock shares. So I'm not doing what I want. I'd rather just have some cash, not be on margin. I have to cancel my stop order before I do that. I don't even know how to do that. Cancel this order. You can do that here. Cancel order. All right, now my stop loss is canceled. Now I can go back here. Give it a little refresh because it's still saying. Yeah, I'm not really on margin. I think I'm on like. I guess I am a little bit on margin. I've used over $1,000, but I also have like I can get off that very quickly. The order. Whoa, 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 whoa. Almost bought instead of sold. That's why you got to be careful. That is why you got to be careful, peoples. All right. See? Just as quickly as I was on margin, I'm off margin. I don't like that. I have $666 of cash. That's a bad omen. What should I buy? All right, I got to buy something. I can't sit with $666 of cash in my account. That's bad luck. That's bad juju. Yeah, this is very much first world problems for sure. All right, I'm getting no good suggestions in the chat. No, it's not good juju. 666, not a good number. I don't know. I'll buy a share of Ford. Actually, I'll buy it. No, I don't want to buy an option. Buy Ford. One share, 1356. Buy. Done. 1356 on Ford. A girlfriend? No, Patrick Star. That's way too expensive for me right now. I do not have that much money. All right, guys, give me some tickers from the chat. Ooh, T-Swan wants Overstock puts. That's interesting. Ticker OSTK. I have not looked at this stock for a while. Overstock was actually for a while. How was your Delta girlfriend? What are you talking about, Shelly? Overstock for a while was trading with Bitcoin because I don't even know why. Like, I do not know why Overstock was trading with Bitcoin. But this is interesting. I mean, isn't Overstock's whole thing is that they have cheaper shit than like if you went to a different furniture store. So maybe Overstock actually could do well. Oh wow, look, I was trading Overstock options like more than a year ago. I made some good money on that one. Bought one for $460, sold it for $630. Overstock, if it has cheaper. Oh, that's not true, Shelly. I'm just going to see a friend who happens to be a girl. I don't know. We'll see. But Overstock, if it has cheaper things than other, then you got to think if we do come into a downturn, maybe people are shopping more at Overstock than they would at other spots where things are more expensive. You know, it's like people who would shop at Walmart go into a dollar store, or people that would shop at Target go into a dollar store because the market is not doing well. All right. I don't really have any thoughts on puts. I mean, the chart looks. Let me go out to a little bit longer of a chart. I mean, yeah. Whoa. I did not read any of that, but I clicked saying that I did. Let's look at some candles. Yeah, I mean, it just like are you hoping for this gap to be filled right down here, like come all the way down to What? These charts suck. I can't even see. I can't see the level. Come down to $25. Wow, you dear 30 and all of this down. Huh? Oh, I think Easy Mike's talking about the VIX. We can check out the VIX real quick. I don't really know what it's doing. Oh man, what is going on with the Qs? Can we get some love for the Qs, people? Please. VXX, we are looking. VXX isn't the actual VIX. Let me see the actual VIX price. Oh, 24, 21. That's not bad. Yeah, anything under I like anything under 30. VIX calls. See, the problem is if you're buying VIX calls, you're essentially hoping for a market downturn. At that point, why not just buy puts on the Qs or puts on the SPY or sell some options to where it's going, you know, you're putting yourself up in a bearish position. All right, the other thing that I wanted to talk today about was Apple. Apple, to me, again, and I said this earlier on the show, some of the bigger names, your Apples, your Microsofts, I'm worried about because we had Microsoft come out and give this guidance saying the Forex, the Forex exchange rates aren't as favorable, so our profits, our margins aren't going to be as good. It's like Apple sells things internationally too, so wouldn't you think that's going to affect Apple? Or the flip side to that is maybe that's just Microsoft's excuse for why they're not going to make as much money this quarter as they did last quarter. With that said, that I am still worried about some of these bigger stocks, some of these bigger companies, and they have some to go to the downside. The thing that I like is that I think that downside is very, I won't say limited, but I think it'd be very hard to imagine if Apple drops. So if Apple drops 10% here, that would be $14.60. So we can say it'll get right down to the $130 level. That'll be lower than where we were at in May. Technically, the 52-week low was 156, but I believe that was like that one morning and then it came back very, very quickly. And as Hot Dog Jones in the chat's pointing out, Apple has, I believe, literally the most cash of any company, maybe in the history of ever, that they're just sitting on waiting. So if Apple drops to like 130, I'll be buying it all day long down there. And that's where I think, like, with some of these names, because they are so established and they've been around for so long and offered shareholders and like such strong returns for so long, that people are going to be willing to take on that risk when Apple, actually drops down there, if it does. And then I'll get bullish again if I can see this, because if we just look at the 3-month chart, we can see back here in March and April, late March, early April, we were trading at like 175, and we've just been kind of on this downtrend since. We got a little bounce. We came up from 137 to 151, but we've since been coming back down. So until this trend reverses, I'm going to see it keep coming back down to this 137 level, and I'll be watching it there. But yeah, I mean, there's no, yeah, and Hot Dog Jones, if you're buying and holding for long term, I mean, like any day, any time, you can do that any day of the week, and it's a smart investment. It's been a smart investment for the past 20 years. I'm saying if I had to, would I buy Apple stock today if I had to sell it in 2 weeks? No, because I think there's a good chance that in 2 weeks, Apple is actually trading lower than it is here right now. But in 6 months, I think it'll be higher. In a year, and I think it'll be higher. In 5 years, I'll go as far to say I know it'll be higher because, well, and again, this is not investment advice, but if Apple's stock isn't higher than it is now in 5 years, then we're all going to be in serious trouble. So it'll be interesting. It'll be interesting for sure. I don't think Apple's in any danger. Uh-oh. My port was coming back. Now the port's going back down. But these are options. All right, here, I'm going to hedge my, because I'm basically all long right now in my options. How should I hedge my my thing? I could buy some just like YOLO QQQ puts, but a smaller position, so that way I'm still net long, but I'll still make some money if, say, like, what if CPI is bad? All right, here we go. You know what? No, I'm going to wait. I'm going to wait till the end of the day. Wait. I don't know. This is tough. Tough market to trade in, guys. Tough market. All right, fine. I'll start kind of averaging into a little bit of a hedge position here. So I want to buy some QQQ puts. I'm gonna go to the break even like 2%. So it's pretty cheap. 1.87. We'll just buy one for right now. 1.15 to make sure we get filled. See, I always throw 115, then it'll fill me at the best price anyway. So that way I just ensure I get filled. I put 115 as the limit order, but it filled me at 113 just because that was like the best price available, I guess. So hey, look, now if the Q's really drop and shit the bed, then at least I'll have that put protecting me to the downside. But more than likely or not, the Q's will just trade in this range, and I'll be priced out of both contracts most likely. But we'll see. I've had a good week, good month so far, so I can afford to throw some of those bets out there. I've also pulled a decent amount of money out of my Robinhood account. I might throw some back in because I do think the market. I just don't see the markets continuing this trend for much longer. I think we'll get some more. It'll be either like, very bearish or bullish soon. All right, I'm just checking. I do think we're going to have that video from FinTwit that we are going to play, the Brian Shannon interview. Brian Shannon at Alpha Trends, he was on the show last week. Great guy. Very, very smart, knows what he's talking about. So I believe we're going to start doing more with Brian Shannon on our YouTube. He's at Alpha Trends on Twitter. Let me go ahead and get that pulled up because he's just a great Twitter follow. One of these guys that's been doing this for a long time. He's a CMT, which is like a certified technician for, I think it's certified markets technician, but basically just really good at technical analysis. He's, posts these great charts where it looks like he's got a lot going on, but because he's like smart and knows what he's talking about, he can explain it in a way that is really digestible for even people like myself who aren't that great at charts. Let's see what he's doing. Short side starting to become more appealing as the SPY and Qs are under the flat 5-day moving average. Definitive break of Fed VWAP back should lead toward so cool. Well, with that said, let's go ahead, get his interview queued up, ready to go, and we'll play it.
All right, I'm joined by Brian Shannon. Jam-packed room to see him speak today. I walked past and I saw a slide on the board that said, "Do not buy the dip." S&P is down 18% year to date. Why are you taking the do not buy the dip approach?
I say that, I've said it since January. I've said it all last year. Buying a dip as the market is pulling back makes no sense. You're in an immediate disadvantage because prices are moving against you. My whole thing is buy strength after the dip. Let it pull back, settle down a little bit, prove itself that the buyers have regained control, and then go into buy when you've got the momentum at your back and, ride the wave rather than fight it.
And so, like on a day like today, as an example, right, we have a really strong morning. Haven't checked in a couple hours. I'm assuming that's not enough for you to say, hey, this is strength for me to buy the dip. What are you looking for that'll make you say, hey, the market is on my side at this point, I can go long?
Well, we're in a primary downtrend. That doesn't change with one day's activity.
Yep.
I did, however, buy shortly after the open. I put this on Twitter. I wrote about a strategy out in 2008 about chase the gap or wait for the VWAP. So we gapped up big in the morning. The market kind of pulled back for about 3 or 4 minutes. You put a volume-weighted average price off the beginning of the day, and then it stayed under that volume-weighted average price for about 7 or 8 minutes. So we had that little shakeout, and then as the market reclaimed the VWAP, it said the buyers were for real. So I bought right there with a stop below the low of the day. We closed right at the high of the day after a midday shakeout. So I have a very small long position right now. I don't trust this market because we're in a primary downtrend. I sold most of what I bought this morning. And if the market allows me to continue to hold, then I'll continue to hold. By that I mean raise my stop underneath higher lows And if I caught a bottom, it was completely by accident. It's
Okay.
not intentional. But there was some strength there to buy into, and most importantly, limited risk.
Okay. So tell me if this is accurate. In terms of breaking out of this broader downtrend, you're a little bit long now. If the market continues to move higher, you raise the stops up, you get longer. And then if the market turns again, you're ready to get out. Is
Absolutely.
that fair?
Yep. Yeah, 1 foot out the door always.
Okay.
It doesn't matter. I mean, if what position it is. I mean, to me, risk management truly is job number one. I've been doing this 31 years now, and I become less and less tolerant of losers, and I make more money that way.
Okay.
That's just the fact. It's what we all know. Cut your losers, and the more you realize it and implement it, the better you're going to do.
Yes. We've all had trades that turn into long-term positions on us.
At some point,
Everybody has at some point. You can't say you haven't.
no, we all learn the hard way.
Yep. It's like I love the joke about Eddie Lampert with what was it with Kohl's maybe, where is
Kmart, right? He's the Kmart guy.
Kmart has turned into a full-time career.
Right.
As
Yeah,
CEO
yeah.
of the company.
Yeah,
His
he was
trade
the-
turned into a job.
He was the new Warren Buffett
Yes.
and all that stuff.
Yep.
And, yeah.
Yeah. Okay. Cut the losses. So let me ask you this: in terms of setting those stops, how are you picking out the levels to set the stops?
It's all dependent on time frame, but the concept is always the same. The most recent relevant higher low for a long, or the most recent relevant lower high for the short position.
Okay.
In other words, the definition of trend.
Yep.
If I buy a higher high on a very short-term basis, I want to set my stop underneath the most recent higher low. Because if it breaks below that low, the definition of trend, higher highs and higher lows, no longer exists. And if I'm trading it for the trend, there's simply mathematically, definitionally, no reason to continue to hold.
Okay. And can you describe which instruments you're trading? Are you trading the ETFs on the indexes themselves, individual stocks?
I like to trade individual stocks in
Okay.
a bull market. That's my preference. In the bear market, when we have all these, really erratic types of moves, I find the liquidity of the ETFs to be a lot more my style rather than
Okay.
trying to, short-term trade some of the individual names. By personality and what works best for me, I'm naturally a swing trader, but this market hasn't given us really much opportunity to swing much. When I do, I hit blows.
So have you been day trading more, or just you've been sitting on your hands?
I can't sit on my hands.
Okay,
Yeah,
okay.
I've been day trading more, not because I want to again, but that's just the function of what the market's giving me.
Yep.
And when I do hold stuff overnight, it's smaller pieces. I just hit bros on the short side, but I only had a third of my original position left. It went from 44, where I shorted it late last week, to 21 is where I covered it on today's Friday, Wednesday.
Great trade.
It was a third position, and it was a small position to start, but it's nice to get a couple of those.
Yeah, absolutely. Okay, so that's another change. Is in this downturn, you're looking more at the ETFs than the individual stocks.
Generally speaking, yeah.
And I imagine that once we start to see that sustained uptrend at some point, then you'll switch back to individual stocks?
Yeah, you know what? It's always about listening to the market and,
Okay.
and listening to the market, saying these stocks are starting to base, they're starting to show clear, trends again. These are the leaders. Those are the ones I'm going to go to. I'm not going to try to pick through yesterday's winner and try to force it into being today's winner.
Okay.
It's all about always just listening to the messages of the market and letting it reveal where the opportunities are.
Okay, and Brian, let me ask you one fun one.
Yeah.
Do you have a favorite trading story or a least favorite trading story from some point in your career?
There's one that's kind of funny.
Okay.
It's not about me so much, but I ran a day trading office back in 1993.
Okay.
I was the principal there, and we had people come in and trade. And one guy was just terrible. His name was Keith. But he was you could fade everything he did. Anyways, he was just a real happy guy, nice guy, and I kind of felt bad sometimes taking the opposite side of his trade. One day he went and he said, "Hey guys, I've got this short on. I'm going to go down to Starbucks and get a muffin. You want anything?" Like, "No, go ahead, Keith." Keith, the guy, we had these glass one-way mirror windows.
Okay.
He's walking down, not a care in the world, eating his muffin, and the stock that he was short got halted and they got bought out.
Oh my God.
He was gone 20 minutes and this happened.
And there's a
The stock
takeover.
was just the worst luck in the world.
And the stock reopens
Yeah.
plus 30%.
So he kind of had the nickname after that, the Muffin Man.
Okay. And do you know what Keith is doing today?
No idea.
All right, Muffin Man, we don't know. If he's
Right.
out there, we want to hear from you. All right, that's a great
Been a
story.
while, yeah.
Cool. Awesome, Brian. I appreciate it. Appreciate you coming out.
Definitely.
Like I said, jam-packed room to hear you speak. We always appreciate it.
Good, great event. Thanks.
Absolutely.
All right, guys. Sorry about that. Little technical difficulties. But yeah, so Brian Shannon, like I said, I think we're going to do more with him on our YouTube. We're going to start doing like pre-made little pre-edited like 60-second clips where he goes over a trade idea. So if that's something you'd be interested in or have any ideas, let us know in the chat. Let's do some more. We can do some more tickers from the chat. Again, kind of a slow news day. I did see a top Disney executive announced he was resigning today. So let's see Disney's share price. I can go ahead and get my screen shared. There we go. Disney down about 2.4% right now. I don't know. I mean, what do you guys think about Disney? Throw a 1 in the chat if you're bullish Disney, if you'd be buying it down here at around $105 a share, or put a 2 in the chat if you're bearish or wanting to be on the sideline or you want to wait. I'm curious what everyone has to say about this, because this was a stock that was one of the favorites during COVID. Of course, you had Disney Plus taken off. The streaming numbers were just really out of the world. But even before COVID, I mean, look at its pre-COVID levels where we were looking at 150, 130, and now we're well below $100. All right, Rob Smith's long. Rob Smith is long Disney. Let's see whatever. Yeah, Super Spacman. That's what it feels like. That's what it feels like to me. It feels like just a quiet day while everyone's waiting for tomorrow. Yeah, Lord Byron, I agree. I don't think Disney is going anywhere. Like, I think if I have kids in 25 years, they're still going to be watching Disney shit, and we're still going to be going to Disney World. Here's what I think is interesting, and this is a 5-year chart. This is just on Robinhood, so the chart's not great, but you can. I'll say this about the charts: you can get the trend, you can get the point, right? And it's clear that since March 12th, 2021, or March 2021, the stock has been in a downtrend. There have been some bounces, but the stock has been in a downtrend. What I think is interesting is that before COVID, right? Let's do this. Let's go to the SPY. We're going to look at the same 5-year chart, and we're going to go right back to before COVID. February 2020. Where's SPY at? All-time highs. Right? Let's go back to Disney. 5-year chart. Go right here. Look at this. Disney is in a downtrend in the months leading up to COVID. Maybe this had something to do with like people knew in December that this virus was going around, and while it wouldn't affect some companies, it would affect Disney parks. Sure, maybe. But either way, right, the stock was in a downtrend before COVID, showing that there was something investors didn't like about it, even back then at 150. And I'll venture to say it was probably something other than just COVID or the fear of COVID. So I don't know. I mean, I think this... I don't think it's interesting to me right now. The chart, the story, nothing's just super interesting to me about it. The only thing I will say on the bullish side about Disney is just that I'm confident it's not going anywhere. If I could buy it and hold it for 10 years, fine. Like if I'm buying it $100, I assume it'll be over $100 10 years from now. But do I think, would I be surprised essentially if it drops another 20% down to $80? No. I wouldn't be surprised at all. So I'm not really thrilled about the prospect of buying Disney here. Goes asking, will CPI report tomorrow lower than April as predicted? Let's go to let's pull up some. All right, I'm pulling up this site from Trading Economics. I don't even know the exact number projected for tomorrow. Inflation forecast. I do think, I mean, if I had to guess, I'm betting essentially that it is going to come in lower. But that's just my prediction. You can fade that all day long. You know, I've been wrong on this show before. I've been right on this show before, but I've been wrong too. So I don't know what the exact projection is. I am, like I said, essentially betting on that CPI number coming in lower and the market's rallying off that tomorrow just as a short-term play. I think even if inflation does come in lower than projected, it's great news for us that inflation could be topping, but it's like, do people really care that inflation is 8% instead of 8.5? No, that's the thing that only economists and traders and investors care about. Bottom line is things are still way too expensive than comfortable for most Americans right now. Gas is too expensive for most Americans. Food is too expensive for most Americans. There are like some crazy surveys being like reported where, you know, like a large percentage of people have like cut back, you know, like parents are like cutting back on food they're eating to make sure their kids, you know, just things like that shouldn't be the case. So again, I do not think that there is anything, even if inflation comes down as projected. Like I said, I don't think it really will matter in the sense that you know, people aren't going to feel any better that they hear that the CPI is slightly lower. But I do think investors will care if it looks like that it's a top. In April, the CPI for all urban consumers rose 0.3% seasonally adjusted and rose 8.3% over the last 12 months, not seasonally adjusted. Yeah, I'm just on the Bureau of Labor Statistics right now, so we'll see. Food prices up. Oh wow! When I click that link, it doesn't take me to the screen I'm sharing. Yeah, let's go through some of this. So, food prices up 10.8% per year, ended April 2022, largest 12-month increase since November 1980. Wow. And here they have broken down exactly which food items. You know, here's meats, poultry, fish, and eggs. You can see the price increase there, just that sharp spike up at the end here. But they all look pretty similar, right? You know, all items, you know, so we've had high inflationary times in the past. We've always gotten through it. It's not comfortable. Again, it needs to come down. The Fed is doing what it can, raising rates. The question is that really going to have an impact on inflation? And that's very highly debated among different, you know, economists and analysts that, yes, you know, in theory, raising rates will slow down the economy, but will it have a positive impact on in terms of bringing inflation down? Or will what it's doing to unemployment and other parts, including, you know, stocks coming down and potentially the housing market slowing down and people's homes losing values, is that worth the hiking the rates right now? And it's debated. It's not just like a given. Most people, I feel like, are taking it as a given. I think it's just more so the Fed knows they have to do something, so they're doing what they're able to do, which is raising rates. I don't know if the Fed has much more power to do really anything else outside of that. So yeah, definitely some interesting things here on the payroll. Employment rises by 390,000 in May. Unemployment remains at 3.6. Productivity decreases. April job openings decreases. Layoffs and discharges edge down to. So layoffs are edging down. You see, like, it's so confusing. Like, I think when you're looking at a lot of these headlines, because like one will read as very bullish. Jobless rates down over the year in 388 of 399 metro areas. Payroll jobs up in 129. That seems good. That seems good to me. All right, let's go back, see what's going on in the markets. Ooh, those BABA calls are doing well. Up 13%. If I get much more than this, I might just take the prop. The problem is I want to at least try to get back to green on the day. Now those Q calls are like dead. What is going on with the Qs, guys? What's driving the Qs lower? Let's check. We know it's not Tesla, because Tesla's actually having a good day, up 1.5%. Here, let's do this. Let's go back to the Qs. I'm going to see exactly what the biggest holdings are. Apple, Microsoft, Amazon, Google. So essentially exactly what you would think. Apple down 1.4%. Yeah, that's more than the Q. So Apple's dragging the Qs down. Microsoft, wow, green, helping out. Amazon down 1.6%. What about our chip friends? What about our chips in the, or what about our friends in the chip industry? We've got NVIDIA. NVIDIA is pretty much right in line with the Qs. Surprising. It's rare, I feel like, to see Apple lagging the most out of the biggest tech stocks. What about Meta? My first time ever searching for the ticker using call sign Meta. Meta down 3.5% today. So that's one of your stocks dragging the Qs down. How is Solar doing today? Talking about Array earlier. What about our friend Sunrun? Whoa, not Shopify. We can talk about Shopify real quick too. Shopify is now, it's $377. This was a $1,600 stock not too long ago. But the PE is still insane, 247. Like, I want nothing to do with this. All right, Jay Rice. 1 week trade for your $600. Buy 500 PCE. Sell the 12s for 50. Okay, wait. Sell the 12 what? 12 calls? 12 puts? Small cap energy ETF. I don't know. This thing looks like it could be overextended. What if it drops 10%? I mean, it's up, look, 27% past 3 months. Let's see some of the biggest holdings. Southwest Energy. Southwestern Energy Co. is a holding company which engages in the exploration, development, and production of natural gas, oil. How's natural gas doing today, by the way? Oil. Jeez. I mean, Natty Gas has just been on an insane run. I mean, this is a 2 times daily return of an index that measures the price performance of natural gas. But look at the 3-month return. I mean, I know this is leverage, but 219% in 3 months. 52% in the last month alone. And that's after we already had this whole, move. We knew that Natty Gas was getting expensive, and we didn't have enough. So the supply's low, the demand's high. That's going to cause prices to skyrocket. Just an incredible run. I wonder, so there's boil and there's cold, which is the inverse for boil. I traded cold not too long ago. Let me see the history here. Wait, what? All right, well, usually it'd show me my history on how I've traded it, but now I don't know why Robinhood's not doing that. Yeah, Cheniere LNG is a good natty gas. There's also TEL, ticker TELL. This thing's been on a great run. I mean, it's only a $4 stock, but well, maybe it really hasn't. Well, I mean, it's still gone from 240 all the way up to $630, but this one is more of a growthy, like, long-term company. I don't think it's actually at some of the levels of some of these. What's the market cap here? Still $2.5 billion. I mean, that's no small company. That's not a small company. No volume though, really, on this stock at all. But hey, sometimes you can find a deal that way with the stock that's not. Yeah, Jay, I agree. I 100% agree. I mean, I bought one share Ford. Look at my equity; it's $13.50. I'll be fine. I agree. I don't like to buy stocks in downtrends, but I also, if it looks like something's could be a little bit overextended, I'd rather wait for a potential pullback for right now. I'm good with what I've got. I think right now I've got a tiny bit of cash. I mean, I've got these shares of Southern Copper Mining that really shouldn't be that volatile because it's a mining stock, although it is down 2% today. So I'm happy with just sitting on that, hoping it appreciates and hopefully holding it long enough to get paid that nice dividend at 6.5. So it's at least like a few $100. But yeah. Those are my trades for the day. You guys know what I'm rocking with into tomorrow, into CPI. I've got these QQQ calls that are not doing well, BABA calls that are doing well, up 20% now. Wow. Maybe I should just sell those, take the profit. And the QQQ puts just as kind of a hedge, but I'm still very much longer on the call side, $240 in equity opposed to the 110 there. About $1,000 in the BABA calls. So we shall see. I'm just trying to get back even on the day. I'll let you guys know tomorrow if it ends up happening. Ooh, Easy Mike, BTU. Yeah, Peabody Energy. That's a St. Louis company. Love, 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 love anytime we're talking about some St. Louis or Missouri companies. Speaking of, let's check in on our good friend BTU. This thing has just been a monster. 216% over the last year alone. I mean, damn. Look at this thing. This thing was a dog in COVID. Got down to a buck a share. Imagine buying this up at a buck a share. Now you're up at $26. Wow. Wow. That's an insane move for Peabody. I don't know if I'd be buying coal or coal stocks up here, but. And that's always the question with investing is like, if you would have, I mean, it seems like in hindsight, it's always 2020. But if you could have gone back into COVID, you would know that demand for energy is going to increase. The question is do you want to be exposed to energy that might be valuable, like 10 years down the road? When I'm talking about like solar, clean energy, or do you want what's going to be now, what's provided now? And that's what oil and gas has been able to do is provide us with what we need now. And then if you want that exposure to down the road growth, that's when you got to buy the green energy companies. So there you have it. That will be our show for today, about 2 p.m. I hope you guys join tomorrow. We will be covering the CPI data. Oh, wow. What's going on in BABA? What is going on? All right, maybe I have to sell these. Just take the $200 profit. All right, guys. Hope everyone has a great rest of your Thursday. Please come back tomorrow. Again, we'll be talking about CPI, see how the market's reacting to that. Until then, stay green and have a great rest of your day.